All right. Hello, everybody. Welcome back to another episode of The Market Close. We are officially back after a 1.5 day break. I am sorry we took the break. Obviously, yesterday I was at AIPcon. I think a lot of you guys saw that, and we will talk a lot about AIPcon towards the end of the show and do a little bit of a recap and summary of the experience. But overall, it was awesome. Palantir announced a lot of deals yesterday, but we're back. It required missing the entire Thursday. I thought I was going to be able to do the market open this morning. I did wake up at like 7:30. I thought about it, and then I tried to talk to myself, and I was like, I can't talk. Because like Thursday was just filled with almost 8 hours of talking, and AIPcon was actually outside. It was like in these tents in the cold, and it ended up snowing. So it was just kind of like we were standing for like 7-8 hours in the cold. So I was just exhausted, couldn't talk. Decided there was no point to try to do the market open today. It's just not going to be able to work, but got some sleep, got some rest. We are back, and I woke up at around 12 o'clock. First time in a long time I've woke up at 12 p.m. on a weekday, and I woke up to something that was pretty disgusting. We have so much to talk about all the headlines over the past 24 hours, and obviously so much to dissect in terms of what the future trajectory is of the market going into the end of March. The S&P 500, folks, we have officially lost 670, and we toyed around with losing 670 over the past couple of weeks. Today was one of those days where we legit lost it, and we're not going to recover it anytime soon, at least going into the weekend. And makes sense given every weekend we get a bad headline, markets sell off. Futures last week were very ugly. We were touching these levels, then we bounced up. Now we're right back, 661.53. I'm just happy we're not below 660, but we're $1 away from going below it. So who knows if that could happen. Palantir down 2%, Robinhood down 3%. Nvidia was having a hell of a run. In fact, my covered calls were getting challenged. And then you wake up on a Friday and it's like, boom, your covered calls are totally fine, because this market, once again, is a market that is not going to give you a breakout to the upside or really a breakout to the downside. It's giving you certain stocks that are staying in a range. And Nvidia is one of those names. That one is down 1.4% after hitting 187 yesterday. Path is down 1.5, or Path is actually up 1.5%. They did take a hit on a decent earnings report, so we'll talk more about that. SoFi, once again, below 18. Rocket Lab, basically flat on the day. The private credit name's getting some love today. I'm not sure why. I think maybe they just got so oversold over the past 2 weeks that they needed to get some rotation, but the headlines on private credit are still pretty bad. Nebius, after that $2 billion investment in NVIDIA, actually holding up at 112, which is kind of surprising to me because all the other names have been hit pretty bad. So it goes to show the market is definitely thinking Nebius is one of the better neo clouds, and it's nice to see them getting that momentum. I ran right there, basically flat on the day. Grab. This one has been a disaster. I do not know what's going on with this. It's now going to be closing below the 200-day moving average. It is weird for it to be at these levels. I don't have a reason, but nonetheless, a lot of these stocks in the market aren't really giving you a reason. Zoom right there is down 1.5%. Applied Digital is down 1.4%. Meta is down 4% on the day. I mean, this was on a stupid report. In my opinion, it was a relatively stupid report about them delaying one of their models. They don't even make money off AI models. They make money off advertising. And Zuck's on the call literally said a month ago, we're going to be not releasing our model until we're ready for it. And that headline took the stock down $25, $613. We haven't seen these levels in Meta in about 3 weeks. It was kind of teeter-tottering around that 630, 650 range. Completely just broke out to the downside. AMD below 200. Broadcom was at 350 last week. Now it's at 321. I mean, it's disgusting. It is disgusting across the board. Don't even get me started on Adobe. Let's just say, if you are the CEO of a company and you think that you are entering the most important technological revolution of all time, aka AI, and you think you're going to be a company that dominates in that revolution, why would you leave? Why would you leave? I didn't even look through all the financials. The financials actually weren't that bad. Revenue reaccelerated, but why would you leave? I think the market's just like, okay, if the CEO doesn't want to stay around, then why should we? And that stock getting hit right there, down 7% on the day. Robinhood, we will talk more about Robinhood. Their February metrics were not that good. Their February metrics were not that good. I mean, and it kind of makes sense for Robinhood getting hit today. I know Bitcoin is up and Robinhood's decoupling from Bitcoin right here to the downside. Bitcoin at 71.8. But if you looked at the metrics yesterday, obviously I wasn't live, so we couldn't go through it, but I checked it on my own. Yeah, they just weren't the best. They were up year over year, but in comparison to January, they were significantly down. And it makes sense because February was not a good month in the market. I mean, it was choppy, but it was also pretty ugly. And so trading volumes are starting to go down, at least in the month of February. We'll see if March can pick it back up. But if March doesn't, then Q2 is just not going to be the best. And I understand why the street is once again taking it down. Again, I think Hood is another candidate for covered calls, as that stock has been stuck in that $70 to $80 range. BM&R, I think, actually had a relatively decent day, right? Well, it did at one point. It was at 22.76, up 10%. Now it's back down to 20.71. ETH also kind of got hit as well. It was at 22. Now it's at 2100. The memory names, are they okay? Micron's up 4.72. Okay, they have earnings next week. SanDisk is also up. So once again, the memory name's getting some love. Everyone's favorite photonics play, AAOI. This got dumped 30% in 2 days, and a lot of people, unfortunately, ended up becoming exit liquidity on this name. I think the thesis is real here, and I think there is some really good, strong momentum and growth. But, I mean, when a stock goes up 200% in a month, I don't think people can be that surprised by dilution. And when they file up to 500 million of dilution on a $7.2 billion market cap, I mean, yeah, the stock's going to get a hit. So, I mean, this one probably just taking a breather off that dilution. There also has been a lot of insider selling. Maybe that's not the biggest deal in the world, but at the end of the day, you know, stock goes up this much, you're going to have people taking profits. That stock down another 9.6% today after being down 15% yesterday. S&P 500 at 661. So after the close, we'll talk about everything that happened yesterday. AIPcon, do a little recap of that. We'll talk about Robinhood, all these other different positions. NVIDIA, we have GTC next week. We'll be on the road again next week in California, so we'll talk more about that. But it's been an ugly 24 hours once again. And every week, I think people are afraid of what's going to happen over the weekend. And as a result of that, you see equities that take a hit. What was the main reason that we are experiencing this choppy pain this morning? By the way, in the morning, again, I woke up at like 7:30. Markets were up. I was like, okay, it'll be a good day. Then I fell back asleep, woke up at 12. And I was like, wow, unbelievable that it turned this way. And the reason for it, once again, is oil. Crude oil, which was below 70 on Monday after Trump said some good words about the war ending soon. Folks, we are right back to 96. This is not good. This is not good in any sense of the imagination. We'll talk a lot more about what's going on with oil, but I think this market is so confused, and for good reason, because one day they get a headline that says the war is going to end soon, and then oil goes down, equities go up, and you kind of think you're getting back into some more momentum. And then the next day, forget the next day, the next hour, you get an update that says, actually, this happened, this refinery got struck, these drone strikes are happening here, which implies, even if Trump is not going to say that the excursion, which is what he's calling it now, is going to end soon, it implies that it's not going to end soon. And then oil goes right back up. And so I think it's actually fully logical for the market to be at this 660 level. Not to mention CPI was good, but like at the end of the day, if oil can, and I think PCE wasn't that bad this morning. We'll get an update on some of the macro stuff. But if oil continues to stay high, it's not going to continue to be good. I mean, inflation is going to happen. And so you can't even be mad at the market here. You know, a lot of times when stocks go down and the market goes down, we're like, the market's stupid, it doesn't get it. It's like, no, the market is trying to figure out, are we in a war? Are we not in a war? Is this an excursion? Is this happening? Is this not happening? Is oil going to go up? Is oil going to go down? We had a headline 2 hours ago that Iran is now letting some Indian tankers go through the Strait of Hormuz, which is good, but then it's closed off to a bunch of other countries. Like, there are so many different confusing elements of how this whole thing is playing out, which makes sense for why these stocks cannot break out of range. I mean, if you think these stocks are going to break out like a Hood, NVIDIA, an Adobe, a Rocket Lab, a SoFi in this macro environment, it just feels a bit naive. Now, could it happen if things change from a macro perspective? Yeah, but the macro is kind of stagflationary with a over-looming war that might end soon, that might not end soon. And then you have good earnings, but none of those earnings can be respected in the context of this macro in year 4 of a bull market. Like, it just feels very hard to imagine that even after Jensen says a bunch of good stuff next week around GTC, that NVIDIA is going to break out above 200. And even if it does, will it be able to hold any of that momentum if the S&P 500 is down 3% year to date? And so we'll kind of talk about some of the strategies that I think people are deploying in this market to navigate it. But it's one of those things where I can't even be that mad that we're down at these levels. Now, Meta, I think it is kind of stupid. The market's being dumb about it. But then again, bad headline mixed with stagflation concerns, mixed with oil going up, you get this type of pain. And then to top it all off, you had this headline come out 2 minutes ago that the District Court of Appeals is blocking Trump's investigation into JPOW. Remember 2 months ago, Trump said he's going to be investigating JPOW for like the renovation. The District Court of Appeals said that's not happening. And then this judge, who I thought was like just the judge on Fox News, Janine Pereiro or whatever her name is, apparently she's actually one of the U.S. attorney judges or lawyers. And she was giving a press conference 3 minutes ago. I was like, I've seen this lady before. I didn't know she was actually working at the White House.
Supposed to hear this, and they haven't been able to hear any of this because someone has decided that they're not entitled to hear this. Can you take this? Thanks. This process has been arbitrarily undermined by an activist judge. We have a process. We have been asking for information about a matter that has raised questions in many people's minds. Senate banking, the public, the papers, it doesn't matter. So give me the information so I can assess it. Give me the information so the grand jury, comprised of regular Americans, can say, there's nothing here. And I'll accept it the way I accept other cases. Okay? Whatever it is, we'll abide by it. What we don't accept is a judge standing in front of the door of a grand jury blocking our access, a role that has never been envisioned, a role that will now be used by other defense attorneys around the country, who's going to come in with a client and say, oh, my client is being targeted. Don't you dare go in the grand jury. A judge says, yeah.
Okay, so obviously she's pissed off. Quite frankly, I do not give one shit about the JPOW investigation. I care about much bigger things, which is this war that's going on. And maybe some other people care about JPOW spending money to renovate and having to get investigated by the DOJ. But basically, the District Court of Appeals is like, the DOJ has presented zero compelling evidence, zero, for why there should be an investigation. And now you have this Judge Janine lady who's like going off. The CNBC was playing this press conference for 20 minutes of her just yelling at the media about how this happened. I'm like, dude, we're in the middle of a war. And this is what we care about. We care about JPOW's renovation. Like, this is like, I don't know, dude. And like, maybe there's a legitimate case to investigate Jerome Powell, but the whole thing feels ridiculous, which is why the DOJ, which, by the way, this is Trump's DOJ, this is run by Pam Bondi, is the one saying, hey, we don't have any evidence that this is a legit investigation that should even be going forth. So you've just got so many random things happening back and forth. And I think to top it all off, this war, which is just having conflicting narratives across the board, we have a ton of different headlines over the past 24 hours that we'll talk about in regards to the war, is just making markets say, you know what, enough is enough. We don't know what to do with any of these headlines. And until then, we're just going to stay on the sidelines. And that's what we're going to have to do. A federal judge, again, blocked the subpoenas against federal Chair Jerome Powell, saying the DOJ has produced essentially zero evidence. And some people might not even remember that Trump said he wanted to investigate Jerome Powell back in early January. The reason for that, quite frankly, is obviously because, you know, rates weren't coming down and he was mad and he was trying to pressure Jay Powell. And now the DOJ comes out, or the federal judge comes out and says the DOJ barely has any evidence to have this take place. Trump yesterday said rising oil prices are good for the United States because we make more money. I could not believe when he said that. I mean, if anyone wants to make the argument that rising oil prices are somehow good for the United States, be my guest, please. I would love to hear the logic, but you're just getting such unbelievably conflicting narratives from this White House on what's going on. And I think markets are just saying, you know what, enough is enough. We need to get more data to see how this is playing out. And until we do, this war is going to continue to be an overhang on the broader market. The probability for a rate cut going, yeah, I heard Tom Lee said that as well. I could not understand at all why he would make that argument. I mean, I get being contrarian, but Tom Lee and Trump both saying oil prices going up is good for the United States. A little confusing, to say the least. The rate cut probability is now less than 1% for March 18th. That's going to be next Wednesday. We are not going to be getting that rate cut. And in a world in which oil stays above 90, we are definitely not getting a rate cut anytime soon. We have now one cut priced in for September. I mean, if this thing doesn't end soon, this little excursion doesn't go away, as Trump has been saying, and oil continues to stay high, I don't even know if we get that September cut. Now, I think we should get a cut. I'm not on the side of saying we shouldn't get a cut, even with oil prices being at this level, but I'm being realistic about the Federal Reserve. Whether it's Kevin Warsh, whether it's Rick Reeder or Jay Powell, they're just not going to be able to convince the majority of the Fed governors to cut if oil prices continue to stay high. And, you know, as a result, we are seeing the weakness in the equity markets because of that. All right, let's get into a ton of headlines. Let's talk about everything that happened over the past 24 hours. Thank you, everybody, for being here. Again, sorry for taking the day off yesterday, but I did record some interviews, and I think you guys will enjoy those when they are posted. Friday, March 13th, 4 p.m., the stock market is now closed. Let's do a longer bell today. To do a longer bell because we missed a couple shows, but we are back. Meta ends the day down 4%. Micron up 5%. SanDisk up 7%. Bitcoin 71.86. I actually think it's really nice that Bitcoin's even holding above 71. We were at 74 or 73.939 early in the morning, but then we got hit. S&P is now officially down 3%. Year to date, 662.36. We have given up that 670 level that we were around. Robinhood 73.39. That was down 4%. Palantir was down 2%. Palantir also holding the 150s. Not that horrible, even if it falls into the 145s. The other SaaS names have been obliterated, so it's nice to see Palantir at least hold on to those levels. IGV back down to 84. Wow, it went to 83 today. This thing was pushing 88 a couple of days ago. 84.20. That one is down. Salesforce once again down 3%. ServiceNow actually stayed a little bit green on the day. How about Intuit? Was that down? Intuit was up 1%. So Adobe and Salesforce were the ones that got hit the worst today. Adobe down 7.5% of the day. Michael Burry, this was his main stock over the past month, going long Adobe. So this one, unfortunately for now, is just not working out. Again, the fundamentals and the financials were actually pretty good from some of the numbers that I saw. It's just, I think the CEO leaving gave the market a lot of pain. And when I talked to Steve last night, he said the call was horrible. I didn't listen to the call, but he said the call was really bad. And maybe that's what contributed to some of the pain. Bloom Energy right there, that's down 1.2%. CrowdStrike was flat on the day. Coherent was up 0.65. Grab took another 1% decline on the day. Serve Robotics was down 5% after a decent earnings. Zoom was down 1.12%. Apple 250 down 2%. Never a good thing when Apple, one of the top 4 companies on the planet, gets hit down 2% after it was down 2% last week. So Apple, which was pushing 270 a couple weeks ago, right back down into the 250s. NVIDIA closed at 180.25 after being at 187. Tesla, 391. Meta got hit really hard with a headline today, 613 down from 640. Where was Google? Are we above 300? Google 302, just barely above 300. And the other one, which is Microsoft, I hope we're above 400. We are at 395 again on Microsoft. I think this is the 10th time it's flipped below 400 in the past 3 weeks, as Microsoft down another 1.57% on the day. Zeta as well took a 1% hit. The Robinhood's Venture Fund took a 2% hit on the day. Intel was up a little bit. What about the semis? In general, were they up? Kind of flat. TSM was kind of flat. SMCI was down. ON was down. Intel was up. And then the SaaS names obviously took a big hit along with the fintech names. S&P 500 again for the day, down 0.56%. All right, that's what we got. That is what we got. An ugly week, to say the least. It could have been worse, given where we were on Sunday night. But ironically, the S&P actually closed pretty much where we were on Sunday night. It's just individual stocks got a bit of a rebound. Let me know in the chat. What are people doing? What moves did you make? What did you sell? What did you buy? I did nothing this week other than, once again, collect premium on selling calls on NVIDIA. I mean, it's been working at this point for 4 weeks in a row. And again, we'll talk about different strategies, but to me, I think that has been one of the easiest ways to kind of navigate some of the volatility, along with covered calls on other different stocks. But NVIDIA has been some of the most lucrative stuff. And we'll get into all the headlines over the past 24 hours and kind of try to piece together the puzzle on how this has been playing out. We'll do a longer stream here today because we missed the past 3 shows, and talk about AIPcon, all that stuff as well. Adrian says, I sold Nebius. I bought Meta and Tesla. Johnny said, I'm holding. Merkin said, I bought Meta and Grab. Bought a little Shopify. Where is Shopee? Where is Shopee? Shopee's at 122. Okay, so that was at 107 at the worst of it. Where is Hims? Where did that one go? Hims, are we still at 25? We are 24. I know that one made a breakout to 28 the other day. So nice to see it at least holding those 20 levels. SoFi, ETH, BMNR, Amazon. Elaine says I collected premiums on Palantir. Vish says I bought Rocket Lab, bought APLD, and I ran. All right, so it seems like people are still buying, which is good, especially as these equity prices get hit lower. And it seems like a lot of people are navigating the derivatives market to be able to yield premium on a bunch of these names. Yes, I did meet Eric Brock yesterday, and there may or may not have been an interview that was done with Mr. Eric Brock, who is the CEO of Ondas. He came up to me. He was like, Amit. I was like, dude, everyone's saying that I have to talk to you. He was like, all right, let's talk. So we ended up talking. I do not own the stock yet, guys. I'm at the point of my investing journey where I just cannot really buy a stock unless it's a gamble for earnings. I have to do due diligence. Literally the interview, I was just like, all right, so what does Ondas do? Because I have no idea. So no, I'm not in this stock. I need to do a lot more research before fully understanding what I'm buying into. But he was a cool guy. It was fun to talk to him. So this was the set. We'll talk more about this. Okay, so I know I shared Steve the photo of this, and you guys went crazy when he was doing his market open. I did not plan this, okay? Shout out to Sasha and Iliano. because they told me last time at AIPcon I didn't have a set, and they were like, it was just like, it was kind of doing it in the corner, and Sasha was like, all right, we need to get you like a real set if you're going to be interviewing a lot of these people. So she said, we'll have a set for you. I'm like, okay, cool. Sasha is the head of their corporate development, and I just expected like a corner where I could be able to do these interviews. And then Ileana was like, hey, this is how we're going to make it a real set. So they really came through, and it was incredible. I mean, it was kind of emotional seeing that they put this much hard work into it. The bricks are real, by the way. They actually, Ileana became a master of masonry and was able to kind of like, put the bricks up on his own. But that was pretty awesome, dude. That was pretty freaking awesome. I mean, it was kind of just like it was almost like a big thank you from them to me and the entire retail community to be able to build a set like that. But that was really special. That was really fun. And then we did get the man himself on the set with us, Mr. Alex Karp. He was in a good mood, and it was fun. It was a good time. That interview should be coming out either tomorrow or on Sunday. The coolest thing was his assistant ended up taking this picture because, again, it started snowing. Look at this freaking picture, dude. Like, this picture is crazy. Sasha could not get over this picture. I don't know how she caught the snowflakes and the angle and the sort of the exposure, I guess, on the zoom. This picture is just beautiful. I feel like I have to get this picture framed. And so, yeah, it was a fun time. We'll talk more about AIPcon. It was super fun. We had some great interviews, and I think you guys will enjoy it. But why was it outside? They were trying something different. They wanted to do these different, like, immersive experiences that you could actually go into a tent and like engage with the product. The problem is it started snowing, and so those experiences kind of had to go back inside, and so they had to navigate it. The day before, though, like if you're on the East Coast, the day before, because this was on the East Coast, was like 70 degrees, and then yesterday it was freezing. So the East Coast is being as moody as the stock market. But yeah, unfortunately, we had to deal with that snow, and that's how we had to navigate it. Yeah, overall, it was a fun event, but as I was keeping up with the markets over the past 24 hours, I was just like, I wasn't tweeting all the headlines, but I was getting them, and I was like, goodness gracious, every other second, you've got something about this war that is conflicting with what was originally said. And to me, obviously, I'm getting tired of it. As someone who has to cover it and like actually try to break down what's happening, it's getting annoying because it's just like, what is that? Like, if we're in a war, then just say we're in a war and we're going to be in a war for a while. But you can't say that because then oil prices are going to keep spiking. If we're not in a war, which we are in a war, if we're not in a war, then there needs to be a plan to show how this is going to end soon. And I have heard zero details, just objectively speaking, about what the plan is to end anytime soon. In fact, the new Ayatollah put out a statement yesterday. A lot of people are wondering if he's dead or not. We haven't really seen a picture of him, but he put out a written statement that Iranian state media put out yesterday, basically saying he is going to make sure the United States pays for this. I mean, he is showing no signs of reconciliation and adaptation with the United States. So if we don't put boots on the ground and get a real regime change, which is going to be horrible for the stock market if Trump announces that, and he knows that, it's going to be bad for oil prices as well, then we're going to accept this regime. And if we accept this regime, then, what's going on from there? And even if he is dead, whoever they make as the next Ayatollah is probably also not going to be super happy with the United States. So it's almost like we're stuck in a limbo. It's actually just unbelievably infuriating. It's like we're stuck in a limbo. The reason this happened is because there was some massive nuclear threat, apparently, as per the administration. And I don't know if enough people actually believe that, but if that was correct, this is the price that we have to pay, which is that to expect equities to actually do well in this environment. Again, they don't have to crash because I think Meta trading at 20 times forward earnings doesn't necessitate that it needs to go to 10 times forward earnings, which is the good thing about the market, is that it's already taken such a deep correction on these individual stocks. But if we don't have to crash, it also means we don't have to go back up and participate in this massive bull rally, at least until this war is over. And no one knows when this war is going to be over, which is, it really is the annoying part about all this. And I can imagine, put in the chat if you've also just been annoyed by that, whether you're left or right, but politically you agree or disagree with it. Just speaking from an investment perspective, it is almost impossible to say I'm going to go long or go short. You just don't know. And then there's 17 different headlines every other day about the Strait of Hormuz being opened or being closed. If the Strait is actually open, I think a lot of this stuff dies down. But, Iran knows that. They know that's their only piece of negotiating leverage. So they're definitely not going to just open it unless, they're willing to really work with the United States. And it doesn't seem like that's happening right now. I'm annoyed on all fronts. I'm super annoyed with this war. lack of transparency. Yeah, and look, Trump has done a lot of press conferences. It's not like he's hiding or anything. It's just every time he goes live, he says something different. And then he's getting interviewed by Jake Paul yesterday. Like, I'm sorry, but am I going crazy? We're in a war and he's getting interviewed by a boxer. Like, it's like it's almost like they're desperately trying to appeal to the youth about why this war is necessary. And it's just so freaking confusing. Like, what is happening right now?
This country, I mean, we did this excursion. We had to do it, wipe out evil. Sometimes you have evil. And for 47 years, they've been killing people, you know, in the most violent way. The roadside bombs all over the place. That was 95% of them are.
You guys know why they did this interview with Jake Paul, right? You think Jake Paul knows anything about Iranian geopolitics? Not to throw any shade at Jake Paul. I mean, he's a very successful guy, but he's not going to push back against anything that Trump is saying. He's just going to let Trump say what he wants to say, which, okay, that's fine when you're on the campaign trail and you're trying to get elected. When it comes to actually like explaining to the American people what the hell is going on, like they pick a celebrity to do an interview with to try to make sense of this war. Like, I'm sorry, guys, but it's feeling kind of ridiculous. And this is not a political statement on the war is good, the war is bad. The way this is being communicated, in my opinion, I'm giving my opinion here, feels very lackluster and very conflicting. I mean, at least in 2003, Bush had an objective. He got congressional approval for that objective. 85% of Americans were on board with what he was doing. Now, they ended up messing up the execution of it, and obviously it was not something that was a good thing to happen, and it shouldn't have happened, that war. But the transparency and communication on what they were doing and why they were doing it, it was laid out to the American people. It just ended up being a horrible decision. This was just like, okay, boom, we're striking. They have nuclear weapons, and we're going to do a regime change. And 3 weeks later, we're like, okay, so what are we doing here? Why are we doing it? Oh, no, we're not going to do a regime change, but they have to agree with it. It's like, what's happening? What the hell is happening? So I think that's also why, you know, the markets at this point are fortunately stuck in terms of dealing with everything that is going down. Uzi says, I think most people are confused about this. Yes, the polling data has not been good, by the way. The Wall Street Journal reported that Trump has been looking at his internal polling data. It's almost like 25% of Americans agree with this war. I mean, that is, dude, you do not have broad-based support when 25% of Americans are like, yeah, this is a good idea. And can you blame Americans? Americans don't know why this is happening. This is what I was talking about a week ago. When you were struggling to pay the bills, you are not going to be thinking about nuclear threats with Iran as seriously, especially if trying to go into that country then explodes prices, aka the cost of oil, because Iran apparently controls the Strait of Hormuz, which I feel like the administration forgot that was like a thing before they went into this. And if you're living paycheck to paycheck, which is the majority of Americans, it's not going to be an easy pill to swallow unless you genuinely believe that this nuclear threat was so hostile, so bad, so intense that we had to do something about it, which ends up getting into this whole weapons of mass destruction 2.0 kind of narrative. You even have reporting from the Times of Israel that the Israelis are thinking of getting into a ceasefire because even they are confused about exactly what the plan is going forward. And it's like the Israelis have been waiting decades to be able to get into a war like this. And even now, they're just like, well, we might have to take a little bit of a break to restabilize and get everything done. So, yeah, it is very, very confusing to say the least. And the worst thing about this whole thing is we have not even really had a correction on the S&P. 3% down year to date is nothing. It's nothing. A pullback is 5%, a correction is 10%, a bear market is 20%. We haven't had that happen. And again, I don't think that will happen because I think multiples are already so depressed because different sectors have got hit so bad, whether it's SaaS or FinTech or the Max 7, et cetera, that for them to go even that much lower, obviously it's possible, but you know, at some point, you know, do we get a Meta at 88 type of PE if this thing keeps falling? I don't think that's going to happen. I think there's still too much liquidity on the sidelines. There's now almost $8 trillion on the sidelines as well, 7.82 trillion in money market funds. So I think money will be coming in if things get really that bad. But I also think there's a little bit of a put for things to get that bad. But if they were to get that bad, could anyone really blame the market here, given there is a war going on right now? The Nasdaq's down 8% all time. Actually, yeah, you're right. From the highs, right? Or year to date. Year to date, it's down 3. From the highs, S&P's down 5. From the highs, Nasdaq's down 8. And so you are seeing that pain going back and forth. All right, let's get into some of the other different headlines for else we've got going on, but we'll also just talk a little bit and I'll get everyone else's perspective on what's happening. 30 and Wake Up says, unfortunately, if the Middle East conflicts or have passed or any indication, you can't put that cat back in the bag. I'm so happy you said that. That's the other thing. There is no taco here. There is no taco. You can't taco out of a war like this. And you can tell Trump through a variety of things he's been saying. We covered on Monday. He had 2 different press conferences back and forth by continuing to say the war will end soon. It's going to be over, yada, yada, that he's trying to initiate that taco. We had this whole Greenland. That was a real excursion. The whole Greenland tariff thing that he tacoed out of within 72 hours. This is like, bro, you killed their supreme leader. And by the way, I am on the side of saying, hey, yeah, the Iranian regime was horrible. And like the people of Iran were in this deep level of oppression that was not a good thing. But if you don't have a plan, your sort of virtue signaling morality about how we need to help is not backed by any level of execution and reality, then it just falls apart. And this is the nature of just like the world, right? You could have an idea, but if there's no execution behind the idea, how do you manifest anything in any meaningful way? Now, again, if Trump ends the war soon and this is all over, based on the idea of accepting there's not going to be a regime change and they're going to leave the region, I think the markets will recover very easily and markets will be happy. But at what cost will that have taken place? Not even monetarily, but Trump's sort of perception, legacy, narrative, right? What is he going to be thinking the American people are going to think of him for doing all this? And is that going to help in the midterms? And then number 2, if we don't get the regime change, the Iranians are just going to be even more incentivized to get revenge. And you can imagine terrorist attacks are going to get worse because they're going to have to get some type of payback, which obviously the Israelis and the United States would not want. So right now, it just feels like we're stuck in this. And it doesn't look like it's stopping anytime soon. Broadcom right here, down 4% of the day. I don't know why that took that big of a hit. Maybe because the entire optics sector took a bit of a hit today. AMD as well took a 2% hit. Let's get an update on Meta and get through some more of these specific headlines. Then we'll keep talking. But this is why Meta ended up going down 4% today.
We may have led with a story like this because it is potentially so significant and the stock is down a lot. Julia, what's going on?
Yeah, quite a move for Meta shares here. Now, Mark Zuckerberg said back in January that Meta's new AI model would ship in coming months, but Meta doesn't yet have a launch date for its high-stakes large language model called Avocado, according to a source. Now, this comes despite the company ramping up to $135 billion in CapEx this year. Meta's playing catch-up as its AI division has undergone upheaval, including new leadership and Scale AI's Alex Wang, a strategy shift from building open source tools to building its own consumer-facing AI, and also some hiring drama, reports of resentment over new engineering hires paid hundreds of millions of dollars. Now, Meta is saying, quote, our next model will be good, but more importantly, show the rapid trajectory we're on, and then we'll steadily push the frontier over the course of the year. Baird says that the success of Meta's new model is less about competing with other general LLMs and more about its ability to boost Meta's business. Scott?
Okay, we'll follow it. It's a big move in the stock. Don't offer.
Again, I think this was a bit ridiculous for Meta to be down like this, down 4%, just off them delaying Avocado. Remember, Meta's not getting paid or not getting any momentum in their stock based on their AI models. That is for Gemini. That's for OpenAI's GPT and Anthropic's Claude, even though those companies aren't public. Meta's being judged on advertising revenue. So for them to delay a model on Avocado makes it almost feel like it's November, where the street just heard the call and they were happy, but they still want to know what's Meta's AI strategy and they don't believe advertising is enough. When Meta was at 740 a month ago, when they kind of like smashed earnings, the street almost forgot that like they were upset that Zucks doesn't have an AI strategy because the revenue growth was so monumental and the guide in particular was even better at 33%. And then you get a headline like this after Zucks even said on that same call, don't expect, I mean, Zucks literally said, don't expect any new products soon. It's going to take time. And once we figure it out, we will have plenty to announce. I mean, it was almost very condescending the way Zucks was talking about it on the call, but I got, you get it. Like you put up some really good numbers and you tell the street to just give you your time and figure it out. And the street did, and they took the stock up to 740. Now, based on the headline that came out yesterday, it's almost like the street's going right back to that narrative they had in November, where they decided that if Zucks doesn't have a better play outside of ads, they're going to take the stock down, which to me creates a really good buying opportunity. Down 4% right here. Unfortunately, every quote unquote really good buying opportunity is compared to the potential of this war continuing, which just could continue to compress multiples, which is not the best. Trump was just on Fox News radio. Let me pull this up right here. Again, he's been doing a lot of these interviews with these outlets kind of randomly. Here's what he said about an hour ago.
Wait till you see tomorrow. Wait till you see the next day. They're going to be hit so hard. They're going to be hit. They can talk all they want, but, let's see what they do. So they're going to maybe do something having to do with the Straits. I don't know. But they're being hit so hard. It'll take them 20 years to rebuild.
You think Putin is...
I mean, does that give anyone a lot of confidence is the question, right? When Trump says maybe they're doing something with the Straits, I don't know, but they're going to get hit so hard it's going to take them 20 years to rebuild. Does that give enough people confidence? That's the question. Because if it does, then the market's going to be able to move on from this. If it doesn't, then we're going to be stuck here for a while. And I think that's also having an issue with the broader market, or that's creating an issue for the broader market. Yes, I also do agree. Meta and the advertising. I mean, look, we don't have any evidence that advertising is slowing down. Obviously, if we get into a bit of not a recession, but a recessionary environment in terms of lower consumer demand. Consumer confidence, was that good today? Let's check. That obviously could be bad for advertising. By the way, speaking of consumer sentiment, 55.5, lower than 56.6. Okay, so it dropped a little bit today. It is the lowest level in 3 months, though. Consumer confidence, lowest level in 3 months is what we had. So I spoke to someone yesterday at AIPcon. They were a owner of a fashion brand in New York City. Okay. And the interview, I think you guys are going to really enjoy because he was really good at just explaining why Palantir completely changed their business and like why it was so important for them to adopt Palantir. But there are two things that he said almost took them out of business over the past year, which Palantir ended up coming in and quite frankly, literally kept them in business. They had an 18-point swing on the margin. They were losing $9 per clothing. They now make $9 per clothing. So this is all they attributed all of this margin improvement to Palantir. So again, I think it's a really helpful interview for people to understand from a small business perspective in terms of adopting Palantir. But two things that he said almost ruined them: inflation and then tariffs. So over the past year, inflation has been an issue that they have to deal with, probably caused by tariffs to an extent, and then tariffs in general. And they literally almost went out of business. And now the guy's like, we can breathe a little bit because we put Palantir into our company and we're like starting to like make some progress. But now as oil prices goes up, it's only hurting inflation, which is once again putting impacts on the clothing business. And so, going back to this argument about Meta and advertising, I mean, that I asked them what's their largest source of sales. And they said, well, obviously people walking through the store in New York City, that helps, but also social media. And the first thing they're going to have to pull back on is going to be advertising if this oil price continues to stay elevated to these levels, because they're just going to have to make up the cost in other places from inflation. And as a result of that, that's where it could affect Meta, even though I don't think that's why it fell today. I think it fell because of that stupid AI headline, but that could be. Wow, when did Ulta fall 14%? Speaking of the consumer, did they have earnings yesterday? 14% Ulta. They had earnings yesterday. Okay, this is not an EPS miss that would cause. They missed by 3 cents and the stock falls 14%. Does anyone know why? What was the reason? I know why Adobe got hit. 14%. Where the hell was Elf today? Elf was up, even though Elf is down a lot from, it was pushing 100, now it's at 73. And then where's Estee Lauder? That's up 4%. So this looked like it was Ulta thing in particular. 14%. My goodness. No makeup recession rally happening on this one. And again, if this, if Ulta, I imagine, spends a ton of money on social media advertising, if they are seeing their margins compress because of oil or inflation going up, like they're going to have to pull back probably on some advertising, which is just not the best thing for Meta, Google, Pinterest, Snapchat, any of those names. I mean, this is just, again, whatever perspective you want to take on this, it is. I am actually surprised NVIDIA is holding the 180s. Like, I feel like NVIDIA should be testing the 160s, not because I think it deserves to, but because sentiment is so bad. But I think GTC and then the overall growth, and then obviously, NVIDIA is guiding for 80% growth. Like, that's insane, right? So the fact that they're growing that much, at some point, there is a floor to this stock, hopefully. And that's what has made the covered call so lucrative. But it is nice to see at least some of these names not getting absolutely demolished. But still not the best. Okay, Hood, let's talk about that real quick. So Hood didn't have a good February. It's just that simple. They did not have a good February, and as a result of that, they got hit pretty bad. So when I looked at the metrics yesterday, look, the metrics were good if you look at them year to year, but on a monthly basis, month over month, everything was down month over month. Everything. And they guided for 6 to 7% revenue growth. Yeah, that's not enough for Ulta to have any level of premium. So, I mean, look, platform assets went from 324 to 314. Cash sweep that went down. They said they moved $6 billion over to a different direction, which is fine, but nonetheless, you're seeing a little bit less cash, 2% year over year down. Net deposits were good. That was the one good thing. That was up 5.6 billion. Equities was down 227 to 194. Crypto was up a little bit. Margin decreased 18 to 17. That's probably a lot of people got margin called. And then options went from 200 to 180. So although these numbers were good year over year, they were not the best month over month. And I think that's why the street was like, you know what, if March doesn't pick up, which we're not going to get those March numbers for a while, then this might just not be the best quarter for Robinhood. The analysts for Hood Q2, they are expecting, let's put up the earnings, 1.25 billion. Last year, I think they did around 930 million in this time. Also, the prediction markets were down like 600 million contracts. So, yeah, it's just the overall metrics weren't the best. And obviously, because it's so contingent on these trading volumes, which is why the other parts of their business need to expand. Banking's at $1 billion in deposits. That's fine. But I continue to believe this year is going to be more about Hood trying to build out other parts of their business and survive through the volatility versus it being a super, super bullish year just because obviously the war and then ultimately crypto is not doing the best thing, which to me means it's one of those years where if you believe in the long-term potential of this thing becoming $1 trillion company, which I do, you add to, you consolidate, you hold on to that position, you write covered calls against. But these numbers were just not the best. I mean, they were not massive growth numbers. And as a result, it makes sense why the street has been taking them down. Is this a good entry point for Hood? I want to say yes. However, if this thing, BTC, ends up going back below, the $65,000 range and Hood's at this level, it's good. It's going to have an impact on Hood, Coinbase, MicroStrategy, all those guys. So this is what I'm saying. If you're going to buy into a name, I think you have to have at least a strategy of why you're buying into it from a multiple perspective, which I understand if people are buying Adobe, I might not like the name, but I get it. It's cheap, so I understand why. Or you have to have an option strategy that allows you to lower your cost basis, even if you think you're getting into a price that might be a good price, but it might not be a good price. Because expecting Robinhood to go back to 90 anytime soon is just, it's not happening. Same thing with Palantir going back to 200. Same thing with Meta going back to 740. Like that, it's just not happening. We have to be honest with ourselves. If you're buying these stocks, then why? And if it's for the long term, that's one perspective. If it's to write covered calls, that's another perspective. But the idea that they're going to go up immediately just doesn't seem like it's easily going to happen. Bitcoin will fall to 50. I'm actually very surprised it hasn't, given what's going on with oil. And I know oil creates more inflation, so Bitcoin is the hedge, but Bitcoin has not been the hedge towards inflation this entire year. Gold and silver also took a nasty haircut today. Silver down 5%, gold down 2%. The TA on Hood looks bad. I agree with you. I mean, Jason said the same thing on Tuesday. As much as Jason loves Hood, I mean, we both love it, right? We both in this thing at $8. We know that the TA is not good, and then the fundamentals, unfortunately, are being pegged to the market, which is not in the best spot. At this rate, March will be just as bad. Hood is going to have a hard time justifying its multiple. I don't disagree with that. I think if March ends up being bad, which, by the way, the first 13 days of March have been kind of crappy. I know Tom Lee keeps saying we're going to bottom in March, but like that, I mean, maybe this 662 is the bottom, but every time he said that, we haven't really bottomed. And so if this doesn't continue to change, then, we are likely going to be stuck. Besant was on CNBC a couple hours ago. Let's see what he had to say as well. And then we'll keep going from there.
Are you starting to think, if this does keep persisting as it is, that the Navy has to go into the Strait of Hormuz to help ships get through, which would have a big effect on
look, that was always in our planning, that there's the chance that U.S. Navy or perhaps an international coalition will be escorting oil tankers through. There are, in fact, tankers coming through now, Iranian tankers, I believe some Chinese flag tankers have come through. So we know that they have not mined the straits.
And was that what you were just discussing in the Situation Room?
We were discussing a plethora of things.
And is it your belief that the volume of ships going through the Strait of Hormuz will be improving immediately from now?
It is my belief that as soon as it is militarily possible, the U.S. Navy, perhaps with an international coalition, will be escorting vessels through.
I thought was
Okay, so Besant is saying we will have an escortation of vessels in order. The escortation. Did I just say that word? Is that a freaking word? Escortation. That is not a word. But basically, he's saying there's this you know, you miss 1.5 days and you're back to not being able to speak correctly. Basically saying, yes, we're going to escort these vessels through the Strait of Hormuz, but how many can you actually escort, right? You're going to, like, we're talking about 20% of the world's oil supply. If we don't have a massive amount of that happening, then, like, even if you escort a couple of vessels, it's like, okay, whatever. That's not necessarily going to change anything in terms of the broader oil prices. And yes, for those saying Besant left during the middle of the interview, I did see a clip of that. Cactus, if you have that clip, you can send it to me, where he left in the middle of the interview and he was called to the Situation Room, and then he came back to the interview, and it was kind of funny because they were like, so what happened? And he just started stumbling on his words. He was like, no, everything's fine. We're going to be all right. But it's just again, like, no one knows. Everyone is so damn confused on how this is going to play out. Babe, don't worry. It was just a little bit of escortation. A little bit of an excursion, a little bit of an escortation. And then he came back stressed. Yes, that's correct. Where's that? Dude, I thought I saved that video. Cactus, if you have it, you can send it to me. Because I saw it early in the morning, and I was like, that's actually hilarious. And you could just tell he was not necessarily feeling the best. What a freaking market, bro. What a freaking market. I mean, so far they haven't officially announced boots on the ground yet. I know there's been a lot of articles saying that Trump is thinking of it. Here's another clip of him talking on that Fox show. But I think that would be where the market really starts freaking out, if they actually announce troops going in seriously.
We're being nice. I could take out things within the next hour. We could hang up within in 1 hour. You'd be reading about taking out nuclear power plants or power plants that creates the electricity, that creates the water. They have desalinization all over the place. We could do things that would be so bad they could literally never rebuild as a nation again. And we're trying to be nice about it. We're not doing it. Now, they'll go around and shoot civilians all over the place, but we don't do that. But we could take out elements of what they have in terms of infrastructure. They would virtually never be able, time wouldn't matter, never be able to reproduce it. And so far, we've chosen not to do that.
I mean, again, is that the way that this war is going to play out, where Trump is threatening that we could be worse than expected and we're not? At what point do we have to be worse than expected in order to have any level of meaningful success or victory when it comes to regime change? Not just killing a bunch of leaders, but actually changing the regime. Here's that video of Besant leaving in the middle of an interview.
I listened to you on the
president wants you. Sorry, the president wants you.
Oh, okay. Okay. No problem at all. See you shortly, Mr. Secretary.
You can work that in.
Mr. Secretary, I have to say, it's a first, I'm sure a last as well, that an interviewee's been pulled away to go to the Situation Room. How was the president? Was he stressed?
No, the president is in great spirits. The Iranian mission is proceeding well ahead of schedule. And I have to tell you, Wolf, that I've a teenager who's considering military service. And I could give this team my highest compliment, from President Trump to the head of the Joint Chiefs to the Secretary of War. I would say that I would trust my child's life in their hands.
What a weird freaking thing to say when you come back. Hey, is everything okay? If he was just normal, you'd have been like, look, it's classified. I can't talk about it. I'm not going to say if it's good, not going to say if it's bad. It's classified, but we can continue with the interview. Instead, he's like, yeah, my teenager, I would love for him to go to Iran and I would trust him. Like, what are you saying, dude? It's just like, first of all, no parent would just love for their kids to go out into war and have unconditional trust with this military. Like, it sounds like you're just saying nonsense to try to act like everything's okay. And this is what I'm saying. It is so confusing how they are trying to frame the narrative of this war. And when he came back from that meeting, like, maybe he did hear some bad news, but you have to be honest and say, look, I can't say what I heard, but I heard stuff. And if you guys want to run with some headlines saying that things are bad, then go ahead, but I'm not going to confirm or deny anything. Instead, he makes it seem like everything is peachy perfect and sunshine and rainbows, and he would be totally okay with this teenager fighting for the country. Like, it is so freaking weird what is happening. So freaking weird. And I just feel like we have zero confirmation on how this is playing out. Let's do a poll in the chat. I think we've been doing this poll pretty much every week since this thing broke out. And it's a simple question for everyone, whether you're American or not. I mean, straight up, do you support this war? It's yes or no. You either support Trump going in or you don't. And I feel like the majority of people continue to be more confused than not on why we'd go in. Weird stuff. Absolutely freaking weird stuff in terms of how this market is playing out. Let's see some of the other headlines that we had over the past 24 hours. Meta, again, trading at 20 times forward. Seems relatively cheap unless things change, but that's what you got on Meta. What's the name? Pete Hegseth was once again live this morning. I mean, all they did from the quotes that I'm seeing are brag about how they've continued to get rid of everything. Here's one of these videos. But, I mean, they say the same thing almost every day. We're not getting more answers on when exactly this is coming to an end.
We're on plan to defeat, destroy, disable all of their meaningful military capabilities at a pace the world has never seen before. But it's not just that Iran doesn't have a functioning air force, or that their entire navy is at the bottom of the Persian Gulf, or their missile force is shrinking daily. Even more importantly, they also don't have the ability to build more. That's the most important component I'd like to emphasize today.
So look, I agree with Hegseth when he says this. He keeps saying this navy's at the bottom of the Gulf, yada, yada. Like, all of that is fine. And like, obviously the United States and Israeli military is better than the Iranian military. So they are creating a lot of trouble and pain for the Iranians. But that is irrelevant in my opinion, because the number one question, this is my analysis of everything that's going on. The number one question is, are we going to have regime change or not? You can keep sinking all their ships and getting rid of all their weapons and guns and all that, but are we going, is any of that going to result in the Ayatollah going away and then having some level of democracy? Because if that's not going to take place until we either put boots on the ground, which is what we have to do in Iraq, or we just keep bombing Iran for the next 7 months, hoping the people will eventually take over the capital and have some regime change. If that's not going to happen, then this is not ending anytime soon. And they can't keep flexing the might of the military, because the outcome of this war, based on what Trump told us 2 weeks ago when they put out that video at 12 a.m., the night they put out the strike, is for a regime change. And so I am uninterested as an American about hearing how much the U.S. military is dominating at this point. I want to know, is any of that domination leading to the outcome? And the outcome, from my understanding, is getting rid of their nuclear weapons, their nuclear facilities, and having a regime change. And I don't know if any of those objectives are being met, which is, part of the confusing part about this. What if Greenland attacks the U.S. while we are distracted? I don't think Greenland wants to attack the United States. Someone says, with what? Snow and ice? Okay, that's kind of funny. Yeah, I don't think we have to worry about Greenland, Mr. Mike. I think we got other shit to deal with. But I don't know, man. I don't know. And look, we had Farzad on the show, right? We interviewed someone from the region, and like, I'm so sympathetic to his perspective. But remember what he said. He is not all for this war if there is not a plan. He's an anti-war guy. So you can't just say morally we need to free the Iranian people if we don't have a plan. And, if someone thinks there is a meaningful plan in place, then I would love to hear it, because from the administration, whether it's Besant or Lutnick or Trump or Hegseth. I don't see the plan other than dude, this is the most, okay, this is just, as an American, okay, this to me is just disgusting. I'm sorry. This is just how I feel. You can disagree with me or not disagree with me. The White House is tweeting video game clips as a way to explain their strikes on the Iranian people. And it's becoming a little like, it's becoming dystopian. And I say that as someone who's very patriotic, but like, what the hell is going on? This is what they tweeted yesterday.
Holy what? 10. It's out.
I'm sorry, bro, but this is insane to me. It's just, I don't get it. I really, if you agree with that type of communication strategy, be my guest. Yes, that was real. That got 30 million views yesterday. And then this is another one they put up.
Strike to claim it. A strike to claim it. And he got it! Here comes the heat from the USA. Boom! Pins down. What a strike. Who do you think you are?
Dude, this is a war. People are legit dying. Like, I understand this White House has a totally different element of communication with social media, which some of their things I've actually been a fan of how they communicate, because, you know, when you need people's attention, you have to adopt with the modern times. But I mean, if they're going to use Nintendo Wii clips and bowling ESPN strike clips to then adapt to justifying how they're doing this, I don't know, dude. My opinion, I don't like it. And I feel like I'm allowed to have that opinion as an American, because at the end of the day, this is still life or death. Like, Americans are also, it was announced today that another 6 Americans were killed. Like, this is, I don't know. I don't like it. I personally don't like it. This is one of those things. Yeah, the U.S. announced that 6 crew members that were on the crashed Air Force KC-135 Stratotanker have died today. I don't know what the official count is. I think it's about 14. If anyone has the official count, let me know. I think it was like 8 on Monday, 6 today. It might be a bit more, maybe a little less, but yeah, like, this is just, I don't know, guys. It's, forget the stock market, right? Forget stocks going down, forget my portfolio. It's just like, it's a little scary, dude. Like, we're in something where I don't see what the end is, especially when you have someone who's in office who does not want to accept defeat. So if his defeat is going to result in the current regime being in place, he's not going to be happy about that. And I don't know if he's going to feel comfortable telling the American people, yeah, we came in, they still have their horrible regime, but we're leaving now. Because it's going to be like, well, why did you go in? What was the reason? And I think they're going to have to double down on, we got rid of their nukes. They're going to have to really double down on this argument that we totally dismantled their uranium enrichment program. And so even if they still have the son of the Ayatollah as the new Ayatollah, then it doesn't matter, because, you know, we did what we needed to do. And maybe that's how he kind of frames the narrative. But how long is that going to take? And if that does happen, how much damage has to take place before it's fully through? It is confusing. It is confusing beyond imagination. But that's how it's playing out. It's all about stopping oil from China. Yeah, look, I've heard this theory that the whole thing about this was to do it. Look, I know Steve has talked about this theory that the whole argument was, you know, like, we need to stranglehold China from their oil supply, which is why we did this with Iran. I think there were ways to do this without creating the level of confusion. Objectively, if you can't say there's no confusion in what's going on and there's like a straight and narrow path and we know exactly what's happening, you're not being objective. You're not looking at everything that's happening. Iran has launched proxy wars against all different membrane Gulf nations. Not forget the Strait of Hormuz. You already have those things that are happening. That, yes, it's bad for China, but it's bad for everybody else. It's like, oh, we did this to stranglehold China. Look, oil at 100 is not that good for the U.S. I mean, we just have to deploy 41% of the strategic petroleum reserve, which, by the way, I read some good analysis about that. If you look at the amount of oil that is consumed every day, it's like 15 days, 20 days of oil supply. So we bought ourselves 2 weeks of time to not let oil get back above 100. How is that good? Yeah, it's bad for China, but how's that good for the United States? So this was the argument right here. The IEA and the USA are releasing 572 million barrels of oil, and we're consuming almost 30 million a day. So I'll pull up the actual math. When you do the math, it doesn't come out to anything that's like meaningful in terms of the oil that we're putting up. What do you think Karp's perspective is on the war? Well, Karp was live yesterday, right? You heard his perspective. So I think Karp actually did a great job on CNBC talking about this war. Karp, quite frankly, didn't even present a opinion that was like, yes, the war is good. No, the war is not bad. He said, and this is the thing that people forget about Karp. It's, they mischaracterize him in so many different ways, and as a result, mischaracterize Palantir. When the United States says we are going into war, Palantir is unequivocally, and Karp is objectively on the side of the United States, whether he agrees or disagrees with the war. And it's been the same in the Obama administration, when Obama started utilizing ICE that no one wants to talk about and deported more people than Trump did in his first administration in 2017. Palantir was on the side of the Department of Homeland Security. Like, Palantir is unequivocally going to support the Americans. And Karp's job is not to agree ideologically or not with the war, which is what Dario is, trying to impose in terms of how the U.S. can use their software. Karp's analysis is, if the U.S. is at war, I need to make sure the warfighter comes home safe, because I'm picking the side, and that side is the United States. Whether or not he personally agrees or disagrees with that, I think is rather irrelevant in terms of how the company's stance is on what's happening with the war. And I kind of take the same stance. Whether or not the war is good or bad is not really my opinion here. My perspective, based on analyzing all the data, is that the execution on the communication of this war and how this war will inevitably come to an end and what the goals are of this war, I think we can objectively say are not being communicated well to the American people. If anything, they're conflicting with previous things that they've been saying over the past 2 weeks. And as a result of that, those conflicting narratives, where exactly are we supposed to go as stock market investors? Well, you end up either going to cash or doing nothing, which is why I think we're seeing the market get hit. The U.S. now has just 34% capacity of U.S. oil reserves, 243 million. And then, this was the most random thing we saw yesterday as well. Trump said freaking J-Pow needs to... this is, again, adding to the analysis of what's happening in this war. Trump hasn't tweeted for almost a month that J-Pow should be lowering rates because he's been a little bit busy talking about other stuff. Then yesterday he said he should be dropping interest rates immediately. You know that J-Pow's not going to cut the rates. You damn sure know he's not going to cut the rates now that oil prices are going up. So why are you screaming for J-Pow to cut rates? Because once again, he is trying to get the American people to feel it's not his fault that inflation is going up and that gas prices are going up. He's trying to shift the blame onto J-Pow, which I'm not totally in disagreement with Trump that J-Pow has some blame. The Fed has some blame. I think we should be lowering rates. But obviously, this is a distraction tactic from the idea that we just have the Strait of Hormuz closed for the past 15 days. And as a result, that's why oil prices are going up, which is hurting inflation, not necessarily because J-Pow didn't cut rates. Again, this is not political. If you assume this is political, then I think you are way too political. This is objective. The reason Trump is shifting the focus right here, this is just analyzing the game theory of all of this, is because he doesn't want to take accountability for oil prices going up, which president would want it? If there was a Democrat in office, they wouldn't want to take accountability either. Janet Yellen literally changed the definition of a recession in 2022 to not take accountability for the fact that we were in a recession. So it's not political here. It's just analyzing what people in positions of power are doing. And in this case, I just don't think they are effectively being able to explain to everybody, why these things are happening. And as a result, we are stuck here. Let's get a little bit more coverage on that DOJ investigation as well on J-Pow. as we got some breaking news on that a couple of days ago. And then we'll talk more about some of these different headlines in the market.
Annual testimony on the Hill because he was preoccupied, the report said, with this investigation, to which Senator Scott, who chairs the banking committee, suggested he hopes it would, quote, go away.
Yeah, and Senator Scott also said he did not think that Fed Chair Powell did anything wrong. Scott, I want to show you just how sweeping this loss is for the Attorney General's office in Washington, for Jeanine Pirro. There's a quote that I pulled from here in which the judge writes, "Did prosecutors issue those subpoenas for a proper purpose? The court finds they did not. There's abundant evidence that the subpoena's dominant, if not sole purpose, is to harass and pressure Powell either to yield to the president or to resign and make way for a Fed chair," a different Fed chair, of course. And what's also interesting about this opinion is it goes further than just talking about these Powell subpoenas. It talks about the idea that there's a pattern at the DOJ of prosecuting the enemies of the president. There's another line here, Scott says.
Wow. This judge is going to town right here on this. Basically, they're accusing the DOJ of being political in their investigations, and the quote is essentially zero evidence to subpoena Fed Chair Powell.
Consistent with this pattern, the DOJ has now set its sights on Powell. And the point here is that not only did the judge dismiss these subpoenas, but he went further and he cited this pattern by the DOJ. I don't know if Eamon is still there and has a comment, but that kind of language that I read first, I don't know if you bring that to the Bar Association, but that's the kind of move by a prosecutor that the judge is saying is improper and inappropriate. Now, whether or not this clears the way for Kevin Warsh to be approved, I think that what Senator Tillis is saying is that an appeal by the Washington Attorney General will not work in this regard in terms of clearing the way for Tillis to remove his objections to Warsh getting a hearing.
Yeah. I mean, the judge obviously referring to the investigation.
So it looks like Trump is not going to get his investigation into Jay Powell, and Jay Powell's going to have another 3 meetings as being the Fed chair. Again, Jay Powell's, he's going to be gone in May. So the entire investigation happening back in January, it was a bit confusing given the guy was going to be out, and there's just no way in hell he's going to cut rates before May, especially with oil spiking now. Unless oil comes down significantly, but, you know, for that to happen, the war has to end. NVIDIA down a little bit after hours. So, you know, this is another blow to the Trump presidency because they're just not getting the Supreme Court tariff thing was the big one that happened 2 weeks ago. I mean, that kind of really, I think, pissed off Trump the most about everything that's happened this year. And then the second is them not being able to actually prosecute Jay Powell in any meaningful way. All right. So those are all the things in the past 24 hours that happened with the war. Let's get into a bunch of different headlines because we got a lot of other stuff to talk about. But again, my takeaway right here, and you know, again, I will continue to say I don't think this is political. I'm looking at the communication by the people in power, and I'm trying to understand what the reasoning is behind why we struck Iran and how long we're going to stay in Iran. And every single day, you have different people saying different things. You literally have the Energy Secretary, Chris Wright, deleting tweets that are affecting trillions of dollars in the oils markets about what's happening. And the takeaway that I have is that it is very, very confusing to be in the position that we are in right now. And maybe there is some grand master plan that I'm not seeing. Maybe there is some amazing solution that's going to come out of all of this that's going to lead to a ton of abundance. Or maybe they're going to leave, they're going to claim its victory from, you know, getting rid of the enrichment, and the regime is going to stay in place, and then that's how they're going to sell the war. But at this point, I have no idea how or why this continues to happen. And, you know, I just hope it comes to an end soon. But based on everything happening, it doesn't look like it's necessarily going to end soon. 68% of you say no, you don't support this war in the chat. 32% of you guys say yes. So it's about a 70-30 split right here. If they said the reason it's giving their hand away, I don't necessarily think that's the case. I'm not asking the Trump administration to disclose highly tactical strategies on navigating this war. We're asking for logic and justifications for how you will engage in a regime change. which again, the reason I keep saying regime change is because that is what the Trump administration has said since the beginning is the goal of this mission, to get rid of the Ayatollah and bring some level of new, not even democracy, but some level of a change. I mean, they're trying to get the previous prince to come into Iran and have him be a transitionary leader. And maybe, there's a way that plays out. And he's, said that he wants to do it. He was actually on the Olin podcast recently as well. But, will exactly they be able to do this is the broader question. So, look, we'll find out. Hopefully nothing crazy happens over the weekend. We're going to see what happens. But again, my perspective, which I think is very objective here, looking at everything that they're saying versus everything that they're not saying versus the conflicting narratives around things. And by the way, it's also not that easy to put the pieces of the puzzle together because Trump is doing 17 different interviews every single day with different media outlets. It's like, it's a very confusing CBS, then Axios, then Fox, then CNN, then the New York Post. It's like he's giving these little tidbits of information to all these different people. And then you're trying to piece it together to understand, okay, what is actually happening? And that's where you get like a CBS tweet go viral and, crash the oil markets 3 days ago when Trump says the war is going to end soon. And then it just disappears the next day because he says something that implies it's not going to end soon. So as someone trying to cover this, you're just trying to get all the information and bring it together. And my takeaway right now is that I think a lot of people are confused on exactly how this will end up fully playing out. All right, let's get into some more market stuff. So what else do we have going on in the market? Well, Jensen is not really being the friendliest to Elon right here. And as much as I love Jensen, I think he's not doing Elon any favors. So he put out an entire 22-minute video of him riding in a Mercedes self-drive in San Francisco. And a lot of people are basically saying, well, he's not really helping Tesla's FSD bull case.
All right, that's an interesting scenario. Let's see how we handle it. Oh, we detect from here. We decide to do the lane change.
That makes a lot of sense, actually. Because
But
once
we
you
are going
cross the
straight.
street,
That's right. Yeah.
once you cross the street, that's not very much distance to stop. And so we're going straight. That's going to be interesting.
So we'll go past them and then do a lane change.
Yeah.
Oh, you
Just
mean
now,
you
it would
mean
probably.
reflection drivers.
Yeah. I wonder what they do.
I think they will get around it.
You think so?
I don't know. Yeah, we can, but we can
I would
always,
say just now.
Hopefully, some of them do, and we can always select
Yeah.
those data. In our
So, I mean, this is good for NVIDIA and their Cosmos platform. And, Jensen did say on the call, he thinks the automotive business can be as high as the data center business one day, which it was a quote that went under the radar. But, I mean, that would be hundreds of billions of dollars per year if he's thinking the automotive business can get there. So, look, FSD continues to be amazing. I was in FSD for 4 hours yesterday. I cannot explain how unbelievably satisfying it was to just sit in the car late at night and let the car take me home. I mean, not once did I have to intervene. Not once. It was just such a special experience, and it makes me want to buy Tesla. The problem is Tesla's earnings growth is struggling right now, right? And so, I understand the valuation is not the most compelling, but the product is literally the best use case of AI that I feel like exists in the real world. And Jensen knows that, and he's going after that opportunity, which is, why they are trying to show that they can also do self-driving in a meaningful way. Then to put some more issues in terms of what's going on with Elon's empire, a lot of people are leaving XAI. Yesterday, this one guy left who's like one of the original co-founders, and he was a really, really important person, Guo Dong Zhang. This thing went super viral, and you had all the XAI employees responding, saying, "We're going to miss you. We're going to miss you. We wish you the best." And Elon said many talented people over the past few years were declined an offer and even an interview in XAI. My apologies. We're going to go through the company interview history and reach out to promising candidates. He also said XAI was not built right the first time around, so it's being rebuilt from the foundations up. Same thing happened with Tesla. Now, I am not an expert on everything going on in XAI. I don't follow it that closely. Quite frankly, there's nothing to follow. XAI, as much as I love Elon, there's nothing there, guys. There's nothing there. Grok is a joke. It's not exciting. They haven't released a new model in months. Gemini and Claude and GPT are taking over the world. The only thing people use Grok for is on Twitter to fact check when people tweet something fake, like, "Hey, Grok, is this real?" And then Grok's like, "No, this is not real." Outside of that, XAI feels like the only value it will have is creating a brain for Optimus. which I don't even know if that needed to be an entirely different company. They could have just done that inside of Tesla. So it is kind of crazy that all these people, I think 8 of the 12 co-founders have left. And now Elon is admitting that they need to find more talent. And so they messed up on the interview process a while ago. And he's talking about how we need to, re-interview people to join XAI. The other thing that's crazy about this, and this is the actual juicy story, okay? And this was an article that is not from Michael Burry, but he reposted it. And I thought it quite frankly made a lot of sense. This was from something else, is around what's happening with the NASDAQ and SpaceX, which once again leads me to believe this IPO is just one of the scariest ones I've ever seen. So SpaceX is preparing what could be the largest IPO in history, $1.75 trillion. The NASDAQ wants the listing so bad, they're literally changing how the NASDAQ 100 works. In February, the NASDAQ published a consultation sweeping changes to how companies enter the index. Just like it's pure coincidence that SpaceX has reportedly made fast index inclusion a condition to listing on the NASDAQ, aka the SpaceX says they don't want to go public unless they can get listed into the NASDAQ. The new rule is a fast entry rule that would let any newly listed company whose market cap ranks in the top 40 of the current NASDAQ 100 members get added to the index after just 15 trading days. No seasoning period, no liquidity, no profitability, just you get in to the NASDAQ. Currently, new public companies typically wait up to a year before they're eligible for inclusion. The waiting period exists for a reason. It lets the market establish real price discovery. It protects passive investors from being forced into untested liquid stocks. Basically gives the market the ability to figure out if the company deserves to get there. Now, this is the worst part. The real scandal is the 5x float multiplier. Right now, the S&P 500 uses a free float adjusted methodology. If only 5% of a company's shares are available for public trading, the index weights you at 5% of total market cap, which makes sense. You weight a company based on what investors can buy. The NASDAQ's current methodology already uses total market cap rather than free float for weighting, but for very low float stocks, they at least hand a 10% minimal threshold. Under the new appraisal, the threshold disappears entirely. Instead, any stock with less than 20% free float gets weighted at 5 times its actual float percentage, capped at 100%, obviously, because 5 times 20 is 100. So the math is insanity. If SpaceX IPOs at 1.75 trillion, which is what the number has been floated around at, and floats 5% of its shares, there would be $88 billion worth of stock. Under the 5x multiplier, that means passive funds would be forced to buy $437.5 billion of SpaceX, 25% of its total market cap, if they actually got included into the NASDAQ. The Qs only manage $400 billion. The total NASDAQ 100 ecosystem represents only 1.4 trillion in exposures across ETFs, mutual funds, structured notes, and derivatives. SpaceX would not only be worth more than the entire NASDAQ management of assets and derivatives, it would be 25% of what passive funds have to buy, which is 125% more than the market cap of the NASDAQ in and of itself, which is that $400 billion number. This IPO seems like the biggest, and you know what's going to happen after a couple months. The people that have been holding on to SpaceX for years are going to finally get their exit liquidity that is going to be forced through the passive income funds that are going to be flying into the stock. Now, look, I understand if you've been holding a stock for years, like an actual public company, and then it gets included into the S&P and you use that as your exit liquidity because the big guys have to buy it. So like if you're a retail investor and you bought Palantir at 6, and then they get into the S&P. I think when they got in, they shot up all the way to 40, not literally 6 to 40, but like around that range from 30 to 40 bucks. And then you sell at 40 and the big guys have to buy it from you at 40, which ended up being a good deal because it ended up going to 150. Then, you deserve that because you took the risk when no one was taking the risk. And you took the risk when it was a public company that had to ultimately grow into its valuation and prove that they were worth being a public company that deserves to be part of the S&P or the NASDAQ. With SpaceX, there's no like risk that public market investors are taking in the early days to see it eventually come to fruition. This is just all this private money that's been stuck in this thing for 2 decades finally gets the forced passive liquidity in order to get out of it without any price discovery or meaningful designation of if SpaceX deserves a $1.75 trillion valuation. They're just going to get it, and the NASDAQ's going to make a ton of fees off of it, which is why the NASDAQ is changing their adjusted rules. Like, it feels like a joke. This entire IPO feels like an absolute joke, and it feels like a topping event, quite frankly. Like, it does not seem right that SpaceX is getting this crazy type of valuation as much as, again, they do $15 billion in revenue. I'm sorry, but no, it doesn't make sense. And they had to buy XAI to put it out of its misery because XAI couldn't survive. And I love Elon. I'm an Elon stan. But you got to be objective about the numbers. This seems kind of ridiculous. So that in and of itself, from a tech sector, that implicates all the space stocks, obviously implicates the broader AI sentiment. And eventually we're going to have to see if the market ends up giving SpaceX that massive valuation. Could Ondas get into the S&P 500 in one day? Maybe, but they've got a lot of work to do in terms of being able to get to that point. Ondas, what's their market cap? $4.5 billion. Yeah, they've got to get to at least 20 billion before they get there. I mean, even SoFi at this point, if SoFi continues to stay in this range, that is not going to be eligible for the S&P in a couple months. So, SoFi is going to have to be able to also get some momentum and get above 1850. So yeah, I think Tesla is in an interesting spot right now. Obviously, the entire Elon empire is contingent on this whole SpaceX IPO, and time will tell to see if that thing can actually play out. And then you had this headline today from The Information. Travis Kalanick, the former co-founder or the co-founder of Uber, the former CEO, is now launching a new self-driving car company with backing from Uber. So you've got another person coming into the competitive ecosystem around FSD, and it's the guy who built Uber. I don't know if it's going to win, but it is just going to create a lot more competition in the broader ecosystem. What do you think of Starlink? Starlink is an incredible product, but again, if you're buying SpaceX just for Starlink, which theoretically that is the value of SpaceX at the moment, does it deserve a $1.75 trillion? I mean, look, it's your money at the end of the day, right? If anyone's buying SpaceX, you have to ask yourself, do I think this product is worth $1.75 trillion? If I'm buying it at this level, am I buying it to get a 10% return every year like the S&P, or am I buying it because if you're buying an individual stock, you want to get more than that? Do you think SpaceX can go up further than 10, 15% a year at that market cap? It's just a little tough for it to happen. That's all. And so if it doesn't happen, then what's exactly the point? Google, update on them. Google Maps. I know people love Google Maps. A lot of people have loved this more than Apple Maps. I'm still an Apple Maps guy. I like Apple Maps more, but they have introduced their biggest upgrade in over a decade by officially combining it with Gemini. I feel like essentially they're going to allow LLMs to be integrated into Maps and give you an easy way to navigate it, which is bullish. And it's one of those, core products that Google finally is putting out. And the other thing is, Apple, we talked about their partnership with Gemini. I mean, who knows? Maybe this Google mapping technology is going to be the foundation for the new version of AI Apple Maps whenever Apple Siri ends up coming out. So that's what you have with Google. And, hopefully that'll help Apple as it tries to get a little bit more of a premium for their AI products. Adobe, this was the print yesterday. This is their revenues, $24 billion. I mean, obviously the company is growing. They were at $5 billion in November 2015. They're at 24 on a TTM run rate February 2026. It's not like they're not growing, but I think the CEO leaving was one of the hardest parts for the street to digest. And that's why that stock has taken a hit. Here's another thing I thought that this was crazy. From the COVID lows, guess what's outperforming tech? From the COVID lows, guess what is outperforming tech? Energy. Energy stocks are up 515%. From the COVID lows, tech is only up 312%. Which to me is just fascinating, given we've seen how much tech has been doing well over the past 5 years, but the beginning of this year and the end of last year ended up hurting tech in a variety of different ways. We got an Axios headline. In a phone call with Trump this week, Putin proposed moving Iran's enriched uranium to Russia as a part of a deal to end the war. Trump turned him down, sources tell Axios. Dude, that is a crazy, crazy headline. Could you imagine being Trump and getting an offer from Putin to say, hey, why don't we just move all the uranium to Russia? You know, I know you can't trust them with the nukes, but you can trust us. We haven't launched one. We can deal with all that uranium. That is freaking insane. This is what I mean, guys. Every second there's a new headline around this administration. And I mean, you know, the analysis on Russia and the amount of energy they've been generating is also pretty crazy in terms of profitability. So I think the number, if I'm not wrong, is Russia has generated about $1.7 billion in the past 2 weeks since this war has broken out because oil prices have gone higher. Cactus, if you have the exact quote for that, you can send it to me, but I'm pretty sure it's about 1.7 to 1.9 billion. And, you know, as a result, the number one country that's been probably loving all of this is Russia. That's just crazy for Putin to be on the phone and be like, hey, yeah, why don't we just give it to, you know, we haven't launched the nuke, you know, we were close in 1962. We were really close. But since then we haven't even opened the button to press it. So you can trust us. And Trump must be listening to that like, goodness, bro, I'm stuck in a war. The best negotiation I've gotten all week is freaking you guys wanting to get it off of Iran, which I can't take that. And then you look at this chart from Bank of America. Financials had their largest week of outflows in the past 10 years. Why? Because forget the credit cycle that we're going through in the private credit issues, but now you're seeing people lose trust in the banks and their ability to navigate what's happening because, well, what's going to happen if oil prices stay high? What's going to happen if this war continues? Rates are not going down. And if rates are not going to be going down, then that's not good for the banks that have a majority of losses on their balance sheet when you mark to market what's happening with the loans they gave out in 2022 versus now. Yeah, Financial Times, Russia earns $150 million a day. So basically it's around that $1.5 billion level in the past 10 days in extra revenue from surging oil prices. $150 million a day. I mean, this is just crazy, dude. Absolutely crazy across the board. That would explain the SoFi downfall. Yeah, I think so as well. I mean, and SoFi has good quality loans, but you know the market is still very afraid of how it's playing out. Okay, what was the GDP number today? I missed that in the morning. Let me see. I know that was a big one today. GDP. What did it come in at this morning? What was even the expectation for GDP? So let me pull this up. Amit, do you think Russia did not have nuclear weapons? Well, Russia obviously has nuclear weapons, and you know they would love to make more, but it's just funny that Putin's like, well, you can't trust the Iranians, you can trust us, which it's crazy because if you kind of logically deduce it, it's like I think maybe you can trust the Russians more than the Iranians when it comes to having a nuke, because you know Russia knows they've had at least about 70 years of experience of knowing what it feels like to have a nuclear weapon. So they're going to be a lot more hesitant to use it than the Iranians potentially, but it's still such a crazy way to negotiate it. Okay, GDP. Oh, we had JOLTS yesterday as well. Or no, we had JOLTS today. Okay, so JOLTS came in at 6.94 versus 6.7 in January. That was about 200,000 jobs more than expected. GDP. You guys have different numbers in the chat. GDP. Oh, I see it. 0.7 versus 1.4. Oh, that easily explains why today was ugly in the market. 0.7 versus 1.4. This was for Q4. This also makes sense though, right? Q4, we had the shutdown. So it definitely shouldn't be confusing for why we had that decline. But that's a 50% miss. And guess what? Oil prices staying up doesn't help GDP. No matter how much Trump says oil is good for the United States, like, doesn't feel like that's the case. PCE up 0.3. That came in line. Price index 2.8 versus 2.9. That was good. Core price index 3.1 versus 3.1 expected. Okay, so that's what I thought. PCE wasn't too crazy. Canada had their most job losses today since January of 2022. And then US Q4 GDP revised down to 0.7% annual pace versus 1.4, which means we are now growing below 1%. as per the annual pace on Q4 GDP. I don't think that's going to be the same for Q1 2026, but that's what we had in Q4. Amit, just be straight with us. Are we screwed? So here's why I continue to believe we're not screwed. If the market was trading at absolutely absurd multiples, what is the absurd multiple? It would be October 9th, October 10th levels. If we were trading around those levels, I would say we are screwed because there's no way that the market could sustain those prices. But we're not. Microsoft's not at 550 anymore. It's at 395. Meta's not at 740. It got to 798 at one point. It's at 613. Even Google, which I'm surprised is holding above 300. It's not at 350 anymore. You know, the Nvidia is not as far as it was from last November, but that's also because their growth is just unbelievable. So I think the street's giving them a little bit of the benefit. But SaaS has corrected, fintech has corrected, crypto has corrected. A lot of these growth names are down 20 to 30%, many of them 40 to 50%. So I do not think that we have to go lower. Could we go lower? Of course, if things really get bad. But the idea, I mean, SoFi was at 27. It's at 17. Like, is it really going to go to $10? Maybe, but that's going to require a real big macro drawdown, which once again, I think multiples are still in a spot where you don't have to experience that. But if these stocks were at the levels they were at back in November, October, then yeah, I would say like, if somehow the market kept these prices high in the midst of all this stuff, which obviously is very hard to do, then I think a lot of people would be taking profits, but obviously that hasn't happened. They've corrected. Tesla's not 490 anymore. Bitcoin's not 124,000. Correct. Okay, so this is a good point. The current S&P PE is 26.6 compared to the mean, which is 1820. So the multiples are still high. So it's a very good point. I do agree, and I'm sympathetic to the argument that the S&P is trading at a exaggerated price to earnings, but the growth rate in the past 2 quarters, if you actually looked at the earnings, were the best quarters since 2021. We have had phenomenal earnings growth, which is going to naturally justify a higher premium on the broader market. Can that premium compress? Yes, because it is well above its historical average. But I'm not even talking about the S&P. I'm talking about individual stocks because, again, a lot of us are invested in individual stocks. They've already taken massive haircuts. And so if the S&P goes down more, yeah, those stocks are probably going to get hit more as well. But, I mean, even today, like the S&P was down almost 1%. And look at some of your growth stocks. Rocket Lab was flat. Why? Because Rocket Lab was at $99 at one point. Now it's at $68. So there is some level of an arbitrary floor that the street's holding it to not let it go that much lower, which it could, obviously, if the S&P continues to go down. But, you know, the S&P was much higher when Rocket Lab was here. And given the level of deterioration that it's taken, it's not as intense as one would think it is. Same thing with ASTS and all these other different names that are in the growth. I mean, ASTS was pushing 100 last Tuesday. Now it's at 86. But it's been stuck in this 80 to 100 range for the past couple of weeks. So it's like, does it need to go down to 50? Like, I don't think so. Now, if it was at 150, I would have a different opinion here. But my point is, I think a lot of these names have corrected so much and their earnings don't justify the correction. Definitely not for a company like Meta, for example, or a Microsoft. Obviously not for an Nvidia, where they deserve to get hit that much more. But it might not matter if the market continues to go down a lot. U.S. Commerce Department cancels the planned rule on AI chip exports. Okay, so this is good. This is something that a lot of people were saying was already going to happen. I'm surprised the chip names aren't getting any bid after hours. NVIDIA still flat, SMH still flat, so is AMD. But this was rumored for the past couple of days that NVIDIA was not going to have, or sorry, the U.S. Commerce Department was not going to have this massive chip export rule that was similar to the diffusion rule they had when Biden was in office. And dude, they can't afford to do that. If the stock market goes, then we're actually screwed. Not because we're stock market investors, but because if 401ks go out the window, Trump has nothing to be able to say that he's done that is productive for the American people. If prices are up at the pump, inflation's up, we're not getting rate cuts, and people's 401ks get hit. I mean, like it's going to create a cascading downfall. And then at that point, all you can do is buy the dip and hopefully assume the war ends anytime soon. Or you can take the risk right now and go net short. I just don't think when everyone's prepared to be short, and the short float is the highest we've seen in 10 years, that going net short here easily makes sense. It's too much of a consensus trade, in my opinion, for it to matter. This was Tom Lee yesterday. I want to play this again and see what people think. Again, he made the argument that oil prices going up are good for the markets. I'm sorry, but I just don't understand this logic.
Yeah, I mean, I think tech in general has actually held up really well, including software. It makes sense to us because, and I'm going to make a counterintuitive statement. Higher oil is relatively good for U.S. equities because one, the U.S. is a net producer of oil, but as people worry about global growth slowing because of high oil, they want to own growth stocks, which actually makes them want to own the U.S. stock market because it is a growth index, especially the Mag 7 and software.
So the problem with that line of logic, again, I had to listen to this a couple times yesterday to actually understand what he's saying. He's saying the U.S. is a growth engine, therefore the S&P is a growth index. And if the U.S. has high oil prices because we're drilling so much, we're going to get more money because we're going to grow more because we're drilling so much oil and we're a net producer of oil. The problem is, and this is the part where I'm like, am I crazy for pointing this out? Because I feel like I'm going kind of crazy pointing this out. For U.S. companies to grow, costs have to be reasonable. So for example, if you're a GM and you're selling cars, in order to sell more cars, you have to have reasonably low costs in your supply chain, or at least moderately low costs in your supply chain to be able to squeak out a profit margin so that when you report EPS to your investors every 90 days, they can give you a multiple on that EPS because they feel the growth is good. If your prices go up because your oil goes up in the United States, crude, which is central to every part of your supply chain, forget even the consumer elements of oil, then GM is either going to stop growing as much, A, because consumers might not buy cars as easily because the prices are going up, or they're going to keep growing, but their margins are going to get hit because they have to pay more for one of the most central components of every supply chain in America, which is oil. Yeah, shipping as well. So oil prices going up is good for the US because we're a net export of oil. But if oil prices are still up, it's bad for all the companies that are using oil in their supply chains, in their ecosystem, obviously for consumers, if you're going on flights, cruises, yada, yada. I just don't understand how you reconcile those two arguments. Like I'm very confused how that makes it good for oil prices to be up. And don't even get started on how that affects inflation, which is definitely not good for US stocks because we're not going to be cutting rates. There's no world in which this somehow is great for the US stock market.
So I actually think that this kind of makes sense. And I've heard the earlier conversation today. I'm also in the camp that I think we're making our bottom this month for the equity markets.
Okay. What about, we got Jefferies down 7%, Deutsche down about that much. A lot of people are trying to look around, poke into where these private credit exposures and stuff might be. What would you say about that narrative right now, Tom?
Well, private credit's been a problem for some time. So I think it has been increasingly revealing, as Jamie Dimon said, more cockroaches. I do think it's probably not as systematic as we might fear. I know people carry the Lehman hammer and think that this is a repeat of the GFC. But again, there's a lot of reasons it's not a systematic one. It's just the size of the market's not nearly as large.
I agree with that. I don't know if private credit is as systematic as 2008, but it's obviously not going to be good if you have all these loans that go mark to market and end up going negative. So private credit's a whole different issue, but it shouldn't be, hopefully, as ridiculous as 2008. So we got a headline right here. U.S. invokes Defense Production Act for Sable Offshore Corporation. That is an oil company, if I'm not wrong. So we have the DPA, which is a 1950 U.S. law that gives the president broad powers to direct private companies and industry to prioritize production, accept contracts, or expand capacity for items, services deemed necessary for national defense or emergencies. In few words, the government forces industry to make or prioritize critical stuff for defense and security needs. This is a public company, SOC. SOC, their stock is up 10% after hours, folks. Sable Offshore Corporation, 8.5% after hours. It was down 3% in the day as the United States is officially deploying the DPA on this. Okay, so there you go. This is once again another piece of evidence that the oil markets are not in the best space. GB says what's happening right now is the U.S. is the only active producer and all the world is consuming. So many companies will allocate to the U.S. and more funds will buy America since it's the only country standing. I understand that line of logic, which is essentially Tom Lee's point. The counterpoint, which I feel like is very simple to poke a hole in that logic, is why would other funds start to buy or allocate to U.S. growth stocks if those growth stocks aren't growing anymore? Our oil production might be growing. The revenue coming into all the oil companies might be growing, even though that's also questionable because they're going to have to actually be able to export that oil in a meaningful way. And, you've got a lot of logistical hurdles to even get that oil into the hands of consumers. But if companies' supply chains start breaking down or the prices just start going up, that's not good. If companies have to pull back on their advertising spend because they have to pay more for oil in their supply chain costs, that's not good for Meta or Google, which is not good for their earnings, no matter how much oil we produce. It might be bad for Asia, but it's also bad for us, even if it's good for certain subsectors of the economy. And it's definitely not good. If we have $120 crude oil, consumers are going to really think twice when they decide to go on vacation or do the things that they would be doing if the price of everything goes up, which is actually good for rate cuts because then we're going to have sort of a natural demand deflation curve taking place, but it's going to be for the wrong reason. It's not going to be because of AI or productivity. It's going to be because people are broke and they don't have enough money to pay these ridiculous prices. So I still am not a fan of this argument that rising oil makes sense. It's good for the dollar. That's probably true. DXY. Wow. Crossed 100 today. When's the last time we were at 100 on Dixie? Look at that. There's your safe haven. It's not gold and silver. What about the 10-year? Did we get some people buying bonds today? 10-year 4.283. So people are piling into the dollar. They're selling off treasuries and they're selling off stocks, which once again just creates a horrible, horrible environment. Remember, we're going to have to refinance $10 trillion of debt. We do not want to have to refinance that 4.3%. Yeah, JPY also at 159. That is also not good. This thing, for this thing to be in a reasonable sense, it has to be around that 140 range. You had those rumors 3 weeks ago that, potentially the United States was going to print a bunch of money just to buy up the yen so they could stop pumping. When you put the pieces of the puzzle, it's just not good. Gold is down, silver is down, JPY is up, the 10 years up, the Dixie's up, equities are down, and you have a conflicting narrative every other day about how we're going to navigate oil. Then Trump is unleashing the Defense Production Act just to be able to get more oil into the system. We've released 400 million barrels of oil that is supposed to be used in an absolute emergency. We're releasing that to calm down oil prices for the next 20 days. It's just such an ugly situation and confusing situation. And the only bright side is we're only down 3% on the S&P. I mean, if you told me all this stuff would happen back in October, I'd be like, dude, the S&P is probably touching like 630, 640. And we're at 660. Because the earnings growth has been good enough to be okay. And so in Q1, if we have bad earnings, that's when this whole thing falls apart. That's the one thing we cannot afford in Q1. And we'll know pretty soon. April 10th, we start to get bank earnings. If the banks can't put up good numbers, if they start to have more of those cockroaches pop up in private credit. Yeah, and then, pending home sales have been horrible. Retail inventory is up for real estate. Mortgage rates have not gone that much lower, which is still creating... Trump literally said 2 weeks ago, don't buy a house, wait till rates come down. Okay, well, for rates to come down, we need inflation to come down. For inflation to come down, we can't have crude at $97 a barrel. All this stuff is interconnected. And then Trump said this stuff yesterday: stopping Iran is greater interest to me than oil prices. More important to me, Iran is stopped than high oil price. When oil prices go up, we make a lot of money. The U.S. makes a lot of money when oil prices go up. You got to give Trump credit. He has flipped the narrative completely to be like, hey, it's actually good when oil goes up. For the past year, Trump's been complaining about Biden and oil prices and all this. And now he's like, actually, oil prices going up is it's actually bullish. It is just unbelievable, dude. Absolutely unbelievable. This sounds so gloomy. It is kind of gloomy. I'm not going to lie. It is kind of, I still don't think that means you go short, and maybe I'll be wrong. Maybe going short was the right idea. I still don't mean you sell out of everything and go to cash. The one thing I've been very explicit about is run the damn covered call. Make some money off your portfolio. If it's going to go down, you might as well collect some premium going down with it. And if it's going to stay stuck in a range and you're not selling the covered call, I mean, your portfolio is just not moving. There's no way for it to move and get momentum unless you're yielding some level of volatility. And if it goes up, don't get too afraid. A, you can roll it. B, it's probably coming right back down, which is what has happened with a lot of stocks over the past 3 weeks. I only think that's the best way to navigate it. I mean, I don't think this is the year for mega caps and chill. Look, I agree. This is probably not the year for mega caps and chill, but from a long-term investor perspective and for someone who is very happy with the multiple I'm paying for mega caps, I don't think it's the worst thing to buy the mega caps and chill. I really don't. I know it's boring. I know it's not looking for the latest stock that's $500 million that you can pump to $3 billion and then have to deal with the dilution. That, like, I get it, but Meta at 20 times earnings and Nvidia at 18 times earnings and Microsoft at 22 times earnings, they're not going to move, but it is, you can't feel upset with yourself for buying equities at these prices. You're not going to, like, if Meta goes to 400, you'll be annoyed that you bought it at 600, but you're not going to be like, well, I was an idiot for buying it at 600. You might feel like an idiot, but you're not. Now, you buy a stock that is obviously overextended and overvalued and it goes down, you feel like an idiot for doing it because you knew that you probably shouldn't have bought it. I don't think anyone can blame you if you buy Meta at these levels. And if a stock goes down, a stock goes down. It is what it is, right? That's the nature of the market. I think one way to hedge against that is writing the covered call and navigating it from that perspective as well. So, like, I think people buying Amazon here, even though they might not get a return, aren't going to be mad a couple years from now. But if you're looking for explicit returns, you've got to get very specific and find smaller sectors and rotate the portfolio. And I don't know how many people want to rotate into these micro caps that might play a part in the AI supply chain and then try to ride them up after they run up so much already. I don't know how many people want to chase memory. Micron's going to be interesting next week, dude. Micron's going to probably blow away earnings, but will the market let them go up another 30, 40% after they're up 70% this year? I don't know. I don't know if that's going to be the case. What about Kraken Robotics? How's that stock done? I know it broke out last week. It's at 688. Yeah, it's up 30% this month. Look, again, the Kraken thesis, I still have to kind of look into and understand more. I know that people like this thing, and I get that there is a thesis here and there is an argument. I think the majority of people are buying it as an Anduril proxy. And, you know, I think that's a fair point because they're one of the biggest suppliers to Anduril. I just, once again, if we're in a choppy environment, I'm not sure how much of a premium this stock is going to be able to get, especially because it's already up a lot. I mean, the stock was like $1 last year. Just feels a little safe. I mean, AAOI, the amount of people that chased this damn thing over the past week, I mean, they got hit pretty hard over the past 2 days. And you can't undermine a company's ability to dilute, no matter how much you think. I mean, Amazon's diluting, bro. Amazon is filing for a mixed shelf offering. You don't think these small $3-4 billion companies are going to do that? So you just got to be careful because now, I mean, look, if you bought this thing at 130, for this thing to go back to 130, maybe it happens easily. But once these stocks lose momentum, they lose momentum. And in January, we were filled with high beta momentum that got lost. And the only things that have kind of held up their momentum are the memory names. Even energy lost a bit of momentum with the war, even though they were priced for gaining momentum. But tech lost momentum, space lost momentum, quantum got demolished, nuclear got hit pretty bad. Oh, I interviewed a guy from Centrus Energy, by the way, yesterday, as they're collaborating with Palantir. So I think that interview will be cool for people to see. 1755 on D-Wave. I mean, this thing was pushing $35. Like, Rubrik, I thought they had a great earnings. I didn't go through all the numbers, but from what I saw, initially it was good. The stock was at 80, now it's at 53. It was below 50 a week ago. I just think some of these names are so rooted in a variety of different narratives that it's hard for them to completely go forward. LEU and Palantir, yes. Centrus Energy and Palantir. Centrus Energy and Palantir. Amazon is raising cash, not diluted. Well, no, they're doing two things. They're raising cash from selling bonds, but they also have a mixed shelf offering in which they can sell up to $50 billion of pure stock at the market whenever they want to. And I kind of think they're going to do that to fund their OpenAI investment. But that means if Amazon pumps to like 230 and breaks out of this $200 range, I mean, they're going to take advantage of that. Same thing with IREN that has that 6 billion ATM as well. So once again, the takeaway is it is a choppy environment. And you get some gems like a Circle, as Marty says, correct, that's up 100% in a month. I don't think a lot of people thought that, this would be the crypto play of the year, but it has been. And some of those gems you find, and it's amazing. And if you had a significant portfolio allocation to Circle, you've done very well. You're not feeling any of the pain. But then again, Circle went to $300. Like, a lot of people bought this on the way down. There's not that many people that caught the bottom at 50. So for the people getting this relief, a lot of them are either breaking even or getting close to their average before. But it is bullish for stablecoins, which is a good thing. Are you going to be buying more Grab soon? Yeah. So when I make my final solo 401k contribution, which I probably will be doing in a couple of weeks, I'm buying Grab completely in that solo 401k, which will be about 10,000 shares. So that'll be happening. I mean, honestly, I hope it stays stuck at this 370 range. I think this is just stupid, but I also can't blame the market, because if the entire market is selling off everything, then Grab's going to get caught up in that as well. But that's when I'll be buying it, when I make that solo 401k contribution. Again, if you have not opened up a solo 401k and you are an independent entrepreneur, you have your own LLC, I really would recommend looking into it. You can still contribute for 2025. You can take a massive deduction by having that solo 401k up to like 70 grand. And it's just, I wish I did this in 2019. Dude, I've had an LLC since 2019. I could have been taking off at least 20, 30 grand off my taxes for the past 7 years. And I found out about it last year. This is the stuff they never taught me in high school. Forget high school, not even in college. Dude, I went to business school and I didn't even know what a solo 401k was. I mean, like, goodness, dude. They didn't teach any of this shit. But it is very valuable. Yeah, Nike. What the hell's going on with Nike, bro? Solo 401k can only buy funds? No, you can buy everything. So the platform I use, I'm not sponsored by these guys, but I do recommend checking them out. You can open up a solo 401k everywhere except Robinhood. I wish if Robinhood had let me open, I wouldn't have even gone to this platform. But carry.com, this is the platform. Super, super intuitive. It's $30 a month, user friendly. And, I tried to open up a solo 401k on Schwab and Fidelity, and like they made me fill out like 10 different documents. And I was like, dude, this is ridiculous. Like, I had to get all these, I had to get it notarized. I was like, what the hell is going on? And then I just looked for an alternative and I found this company. And yeah, it was just like, it's almost like the Robinhood of solo 401ks. They made it within 5 minutes, I signed up. So this, I think, is one of the easiest ways you can open it. And you're allowed to, basically, you're allowed to contribute $23,500 as an employer, and then a certain amount after that based on your income and your expenses as an employee if you are a single person LLC. So if you're doing everything by yourself, you don't really get a ton of deductions like other people do with their 401k matches and stuff. So this is, now you have to pay taxes on this eventually, but it decreases your taxes in the current day. So if you get a really big tax bill and you can deduct like 60, 70 grand off of it, I mean, that really helps. And so, that's one of the things I'll be having to do in the next coming weeks. Nike's down 12% in the past week. Like, some of these value stocks that were just getting some real love, Verizon's one of the only ones holding. Actually, Verizon and Coca-Cola actually have held up really well. Verizon now above 50, Coke at 77. But Nike got hit. Do you think Adobe is a value trap like PayPal or Google? I have not been through Adobe's numbers enough to say it's a value trap like PayPal. Google ended up not being a value trap, right? At 150, it ended up being a massive opportunity. PayPal, unfortunately, has been a value trap. Look, my gut tells me Adobe is a value trap because I think the narrative is really messed up on this company. I told you guys I use Canva every day. Canva is incredible. I do think Canva is competition for these guys. I don't know why people pay for Photoshop or Premiere unless you're a super, super advanced editor, which is not the majority of people. I don't think Firefly is that special when it comes to AI, but the core business is growing and reaccelerating growth. But then the CEO leaves yesterday. I don't even think you have to look at the numbers to think the stock's going to go down. Like, and people are like, oh, he's there for 18 years. I'm like, okay, cool. But in 18 years, if this is the biggest revolution we're seeing in the history of humanity, why would you leave? Like it's just like the snowflake guy, Frank Slootman. Why would you leave right before AI is about it? Especially if you want the street to feel convinced that AI is gonna, change your entire business and make everything amazing. Why would you leave from that situation? I mean, if you're a CEO and you really think Adobe's gonna go to $400 a share, let's call 500 a double from here, 250, because you think AI is so monumental, you're not leaving. You want to be part of that journey, part of that story. Unless, it's just not as exciting. Whoa, U.S. to send more than 2,000 Marines to Middle East from Japan. Financial Times, is that, let me pull that up. Is that true? It looks like that might be true. U.S. to send 2,000 Marines to the Middle East from Japan. Thousands of Marines and 3 U.S. warships have been deployed to the Middle East from Japan. Not new. That was early in the morning. Oh, yeah. I'm seeing it right now. The Pentagon is deploying 5,000 Marines and sailors to the Middle East. So this is not necessarily boots on the ground. This is more so just actively having troops at military bases. Boots on the ground would be literally, we are coming to invade Iran and literally, be on the streets. So it's not necessarily boots on the ground. I would imagine it's for the Strait of Hormuz. That's what I'm reading right here from one of these articles. All right. I mean, once again, it is not as convincing that this thing is ending anytime soon. If that's how this situation is playing out. It's a weird environment, guys. It's a weird environment. And unfortunately, there's not an easy way to kind of navigate what's going on other than trying to just yield the volatility from the portfolio and keep building good positions because they'll be here in the next 5 years. We got some clips from Besant. Let's see what he's saying.
What did you advise the president initially as he considered his actions in Iran, and what are you urging him to do now, especially with Americans seeing higher prices at the pump and some of the fallout from that across the economy? Do you express any concerns like those you've expressed in the past on the possibility of these extended wars?
Well, Bill, I appreciate the question. I know you guys have to ask it, but imagine the situation. We're in the situation room where you can't even take your iPod in there, or your AirPods, I guess what they're called. You can't take your iPhone in there. You can't take anything in there because it is the most classified space anywhere in the world. And I sit there with Pete Hegseth and General Kane and Marco Rubio and the entire White House team, and the president and I and the entire senior team are talking about the options and about what we need to do and about how we must best protect the American people. I hate to disappoint you, but I'm not going to show up here and in front of God and everybody else tell you exactly what I said in that classified room, partially because I don't want to go to prison, and partially because I think it's important for the president of the United States to be able to talk to his advisors without those advisors running their mouth to the American media.
Okay. And then here's what Vance said about gas prices.
Now, here's the interesting thing. All this conversation happens where Joe Biden left us in a terrible situation. And the reason why gas prices are where they are today is because of Donald Trump's work to get them lower, because in the Biden administration, they were crazy high. The gas prices we're seeing today are nothing like what we saw at the peak of the Biden administration because the president has set us up for energy dominance. And one of the lessons we all have to take away, frankly, every time we get involved in anything overseas, whether it's in the Middle East or anywhere else, the thing we got to take away from it is energy dominance and energy independence. Rely on our own people, rely on our own energy. Now, here's
Again, I just don't know how convincing that argument is. bringing up Biden's gas prices, they solved that problem. They got gas prices to the lowest they've been in 4 years. They had it under control. They had it better than under control. The gas was $1.99 a couple weeks ago in New Jersey. $2.19, $2.20, $2.25. They fixed it. So, like, blaming that Biden caused it after you fixed the problem to mask the fact that you went back and created a new problem now with this Iran war, because a byproduct of that is higher gas prices, it's just not really that convincing to say it's Biden's fault. Like, let's say it is Biden's fault. You solved it. And you guys probably get a lot of credit for solving it. But when you mess it up again, I mean, people are not going to blame Biden about this now. They're going to blame the Iran war here. Yeah, you had the Russia-Ukraine invasion during Biden. I mean, like, look, if you're a Biden fan, you would say it wasn't all Biden's fault. If you're not a Biden fan, you will ignore all the circumstances that happened in 2022 and say it is Biden's fault. And at the end of the day, the buck stops with the president. But the point is, the Trump administration solved it. Like, oil prices were at a record low after 4 years. And within 2 weeks, it went to the highest level it's been in 4 years simply because of this war. And I don't know if the administration, crude 97 right here, if the administration actually seriously thought about the implications of oil. Like, I feel like they went into the war thinking it would be a Venezuela operation and that they could just get it over with in a couple of days and be done. Or they completely ignored the fact that oil would end up being affected. And if they ignored that, then, you know, whoever they had in the room that was making the decision, like, just happened to not really understand how bad this could become. But now we're here. And we have to deal with what's going on. I share that opinion. They thought it would be the same as Venezuela. Yeah, and it wasn't really Venezuela. Are you buying anything? I didn't buy anything this week. I'm really just running covered calls on my entire portfolio. And, you know, when you get to the point where you have a decent chunk of shares on a lot of stocks, like, it ends up really helping to reduce the pain. Like, it's going very well. Very well. And the start of the year has not been good, but these covered calls, they are freaking print. Even today, I felt like, all right, NVIDIA is going to finally give me some struggle. And then what do you know? Falls back to 180. It's like, okay, cool. I'm good to go. Like, in this market environment, if we're not getting a breakout and we're not getting a breakdown, I feel like that is the... And, you know, I wrote about this in my Substack article, which I know I haven't put out a lot of articles on Substack. I've been planning a lot of them. Hopefully this weekend, we're going to get a bunch of them out. I have so many ideas. It's just the amount of traveling has been a bit aggressive, and so we haven't been able to officially publish them. And I don't use AI to write my articles, so I actually sit there and type every freaking word, because I think people can tell when you just AI summarize something. So, like, I actually really want to write them out fully. But in that 2026 preview, I wrote one of my main strategies was going to be covered calls. And the assumption was not because there was going to be some war or anything. The assumption was, hey, it's year 4 of a bull market. I think things are going to be a little choppy. I didn't think it would be this choppy. But I felt like you'd be able to get away with playing the volatility within a range. I definitely felt Robinhood was going to be choppy. I didn't think it would go to 70. But, you know, that's initially why I wrote the covered calls when it was at 120. It's just been much choppier than I imagined. So this is what we're dealing with. Are you doing it on a weekly basis? Yes, on a weekly basis. Do you think a margin account makes sense to roll covered calls, or should we stick with a cash account? Yeah, I mean, look, if your broker, which I think Robinhood does require you to do this, I don't fully remember, but if your broker requires you to have a margin account to roll your covered calls, then yes, I think rolling is obviously very important. You just have to be careful. And if you don't use margin or don't know how to use margin, or, I mean, but there's ways you can hedge against, because you can go into the settings and literally put a limit on the amount of money you're allowed to borrow. You can make that limit like 0. So even if they force you to make it a margin account just to allow you to roll the option, you could still make sure they don't tempt you by letting you borrow a ton of money. But yeah, rolling is a crucial part of selling options. And, you know, if your brokerage requires that, then I think that's horrible. You want to do year-to-date? My year-to-date is relatively the same as it was last time. It was negative 15 2 weeks ago. I'm pulling it up. You guys can put it in the chat. Year-to-date, negative 17.2. Negative 17.2. So, I mean, if, you know, being stuck within 2% is like, okay, it is what it is. It sucks. But the cash flow that the portfolio is generating is really helpful. And that also allows me to take advantage and buy the dip. Yeah, it seems like most people in that negative 15 to negative 20% range. I mean, look, again, you can't be too upset about that. If you're in growth stocks, you're going to have a correction if growth stocks don't do well. And so if like, oh, the S&P is only down 3, you're down 15. It's like, yeah, but when the S&P was up 3 and I'm up 20, you know, that's the difference. So it's not something unusual. I don't think anyone should be upset about it. But navigating that, in my opinion, is the covered call, at least for now. Or it's a full transition out of those growth stocks, which, again, I don't know how many people want to sell their Meta at these levels, sell their Grab at these levels, sell their SoFi at these levels. You know, the time to sell them was early January. If you didn't do it, you didn't do it. So now it's about navigating it. Yeah, I see negative 10s to negative 20s across the board in the comments. Small price to pay for 3 years of massive gains. I also agree with that. I mean, if you bought Palantir at 10 and it went to 200 and now it's at 150, which is still phenomenal given the state of the rest of the market, I mean, you can't be that upset. You just can't. And if anything, that allows you to buy more or allows you to yield the volatility to generate more cash to eventually buy more. I am okay as long as ramen doesn't increase by more than 0.35 cents. Oh my gosh, bro. What a freaking way to start the year. What a freaking way to start this year. Even the dumpster dives that people have gone after, like the Adobes of the world, the ServiceNow, Salesforce, they haven't worked out. Like, you've not been able to put out a bottom. Wish I could have waited to buy SoFi. You and me both. I really thought I was the guy who was not anti-SoFi, but I was the guy saying, guys, it's SoFi. Like, come on, what are we talking about? Like, it's a bank. And then finally I capitulated and said, you know what? 24, 25 bucks. It's not horrible. It was horrible. It's just, I wish I just bought NVIDIA, bro. Like, NVIDIA was the exact same price it was at when I bought SoFi. I wish I figured out running calls across NVIDIA was just the easiest way to navigate this. I picked freaking SoFi. And I can't even blame Noto. I mean, they're executing. I can't blame the company. It's just not the market environment for it. It's that simple. It's just not. Yeah, now I'm a community member. Where is the market draft? Let's pull that up. Also, again, hold on, let me do this thing real quick. LA meetup is happening on March 28th. So to come through, then please make sure to sign up right here. We will all be talking and trying to navigate what's going on in the markets, even if we're not super bullish. So hopefully it still is a decent time for people. And then Chicago, I think we are officially going to go with May 9th, guys. A ton of you guys signed up, but please make sure to sign up for this if you are coming to Chicago, because we just need to get some confirmation that people definitely want to come through so that we can book the venue. And you can sign up on that form right there for Chicago if you'll be there. Okay, here is the stock draft. I'm at 11.8%. Matt's at 25. Tanner's at 4. Steve is at 3.9. Steve actually was negative. We'll see what brought him back up. Oh, Hims. Hims brought him, but he was down a lot more on Hims. And then Chris is negative 2.7. So right now, Chris is the only one who's negative here. Matt's obviously in the lead. ASTS and Rocket Lab. I'm number 2. Duolingo ruined it. Grab hurting, Hood now negative, Palantir's only up 6%. Apple's actually doing, Apple and Nebius and AMD are doing the best. Tesla's also not doing too bad. Then JP Morgan is up in a decent way. Visa's down. Steve, Hims was killing him. That one has recovered. Or not fully, but helped. MicroStrategy still getting hit. Meta getting hit. Netflix getting hit. Bought Netflix at 122. CRM down 30%. PayPal down 40%. Micron is up almost 3x. And then Tanner got hit with TTD and ServiceNow as the biggest ones, along with Mercado Libre. But ASML, AppLovin, TSM, those were the ones that played out. This is not a new one. This is the one we did in June. We did a stock draft back in June. So in 2 months, it'll be over. And if nothing changes, Matt will be the winner. But we're going to see. When will you have a Portugal meetup? So we have to get through a basic meetup in the bigger European countries first before we start doing the smaller ones. So Portugal might take some time to get there. But hopefully Germany is the first big one that we do. Are you interested in Pershing Square when it IPOs? No. I don't know who the hell would buy Bill Ackman's fund. It's nothing against Bill Ackman, but if you want to buy Meta or Google or Chipotle or Hilton Hotels, just buy them on your own. Why would you buy the Pershing Square fund? Like, I don't get it. What's the point? Maybe if you want to get access to like Universal Music or some of the private stuff they have, but I'm not disrespecting Portugal. I'm just saying it's hard to do a meetup in a brand new continent when you haven't even touched the biggest countries there. We still got to do the UK as well. Figure that out. Yeah, it hurts. But I'm like, why would anyone buy Pershing Square in the public markets? It's just a conglomeration of a bunch of stocks you can buy on your own. Someone explain to me what's the value of it. And then you're paying a freaking performance and management fee for Bill Ackman? Expense ratio? Like, what's the point? When Iran meetup? Unfortunately, we will likely not be doing an Iran meetup. UPS. Yo, how's UPS doing? UPS year to date. See, even my employer is not doing the best. I mean, that's like saying, why wouldn't someone buy an ETF? Yeah, but when you're buying an ETF like the S&P 500 or a cybersecurity ETF or something, you're getting concentrated, not sometimes concentrated exposure, but exposure to a variety of different companies that are together with massive levels of liquidity and a relatively low expense ratio. I mean, I guess if you want to buy Bill Ackman's ETF, then sure you can. But it's not a special ETF is what I'm trying to say. It's Meta, Google, Amazon, Chipotle, and Hilton Hotels. I mean, I understand buying the ARK ETF because there's like this whole growth stock thing you're going after, or the Qs because you're just buying tech. But, oh, sorry, I forgot Uber. Like, what is this ETF, bro? Uber, Hertz, Meta, Google, Amazon, Hilton Hotels. Sorry, they don't even have Chipotle anymore. They got rid of that. They sold out of all of it. You get some Brookfield as well. This doesn't make sense. I don't know. It doesn't make sense to me. And it also is, it's not good to see him take it public right now. Like he's obviously trying to get liquidity. And like, it just seems like a bad sign for someone like that to be thinking, oh, this is a good environment for me to get liquidity. So I don't know. I don't think this one makes a ton of sense. Is Jess still working with you? Yes. If you were at the New York event, you would have seen her. She'll be at the LA event as well. So again, she's behind the scenes. She doesn't really join the stream or anything, but she's been pretty instrumental in terms of getting a lot of shit done this year. And she's kind of the mastermind behind these whole meetups. I was actually with her 2 days ago with Steve. She came with us to the Vlad podcast. So that was really fun. What about Lemonade? Where is Lemonade? Lemonade is at 55. That was up 4%. Circle, that was up 1%. I mean, yeah, some of these names, they got a little bit of a bounce today, but the majority of them, Lemonade's still down a lot from the highs when it was touching $100. It's just all of these sectors decided to take a reset, and you're not really understanding exactly how they're going to come back to normal. Oh, by the way, Seema Modi from CNBC, I met her yesterday, and hopefully we'll get her on the show soon. But she was super interested on coming on the channel because, she was like, I told her what I do, and she was like, I've always wanted to do something on my own, but I've been at CNBC for 10 years. And I was like, well, if you ever want to hop on the channel. So we exchanged numbers, and hopefully we'll get to get some of her analysis on the show as well soon.
The latest is Adobe CEO Shantanu Narayan, who announced last night he is transitioning out of his role once a successor is found. He led Adobe for 18 years successfully through the cloud transformation. But with AI becoming a bigger threat, investors have been left impatient. The stock is down about 60% from its record high. Despite new Gen AI capabilities in the latest quarter, annual recurring revenue did decelerate. Adobe isn't the only company in software that is changing up the C-suite. Workday bringing back its founder Anil Bhusri, call center software company Five9 announcing a new CEO recently, MongoDB appointing CJ Desai, formerly Cloudflare, back in November, but recently consolidating its C-suite positions. Asana with a new CFO who previously held a high-ranking position at NVIDIA. And guys, more changes are expected. We spoke to a few M&A bankers who say corporate boards are conducting reviews real time. They're assessing whether management teams have the right product experience. They say they want visionaries who can lead these companies through this transformational shift that's happening due to AI.
Transformational is wild. She might be the perfect candidate to join the market open. I'm not going to lie.
These companies through this transformational shift that's
there is no such word as transformational, but that's my type of word. That's my type of freaking word.
Happening due to AI, while also, guys, having a deep structural experience in M&A as we're expecting more consolidation in the sector.
Question is, are the people that they're appointing as new CEOs, prepared to take on this new fight? Because, I mean, like Workday, for instance, they appointed one of the founders, right? So it's like, what skills do you need? What are boards looking for when it comes to taking on the AI revolution, transformation, if they're going to be replacing CEOs?
Kind of reminds me of what happened with Intel last year, too. Someone who has deep technological experience is what these boards really want.
Again, I think if the Adobe CEO is leaving, then it's just not going to be easy. It's just not going to be easy for the markets to feel a lot of transformational. What did she say? Transformational. It's not going to be easy for them to see that type of value. You got to hear that word again. I'm going to steal that word.
Who can lead these companies through this transformational shift.
Transformational shift, baby. You got to use that. But it's hard when the CEO is leaving for companies to feel there's going to be that transformational shift in the broader company long term. Is he staying on board? I don't know. Is the Adobe guy staying on board? I don't know, dude. Steve just told me the call was the worst call he's ever heard. So, I don't know. What a freaking market. Well, I've got someone to help join and kind of explain what's going on with the market. Ladies and gentlemen, let's bring him on to the show. What's up, Sam?
Dude. Oops. Yep, here's our mic. I got one of those arms, so it's been doing pretty well. But I gotta tell you, I'm green in the day. I don't know. I do know how it was, but like still, dude, it sucks because it has been a brutal year. My portfolio is like extremely volatile. But I'm negative year to date, so it's not year to date. So it is not a fun situation.
I just think I'm curious what your thoughts are on the communication of this war. You obviously don't have to, give your political thoughts on it, but every day we're moving back and forth based on Trump saying it's going to end or not going to end. Crude is back up almost to 100. Like, Do you think this can end anytime soon? And do you think Trump can somehow taco out of this entire situation?
I don't think he can taco. I actually thought it was a little bit of a taco situation earlier this week. But then it escalated again. And certainly seeing boots in the ground, or at least somewhere in the region, is not a good way to see it de-escalating. I really thought that, okay, so he obviously notices the oil price, releasing the reserves. Okay, maybe there is some sort of sanctity to this whole event. Like maybe it is near an end, right? But I guess one thing we're going to remember is that it appears like it's getting worse right before it gets better, right? So that's a situation where we all thought we were in earlier this week. And it got, I wouldn't say it got worse, but it just didn't get better at all. So yeah, dude, blue polos, let's go. But I gotta be honest, like there's certain sectors that are still doing pretty decent, and it continues to be narrow leadership. But one thing that we've seen was that, hey, look, it's not all, a lot of things that were not going down at the beginning of the year, we're actually going up, are now down. Banks, that's regional banks, XLF, the larger banks as well. Real estate is kind of struggling over here. We're already seeing it start to affect the home builders, or has been affecting the home builders. So that definitely didn't come back. The bounce that we saw in software was, it appears like it was a dead cat bounce, and could possibly be going lower maybe. But semiconductors are getting hit, not so much today. And it's probably because GTC is next week. This is the only reason why I don't want to be like extremely bearish going to next week, because GTC is happening all next week. Yeah. So there's a lot of excitement and exposure to the semiconductor industry. So I'm not going to be super bearish getting into next week. I'm going to ride with whatever I have right now, because some of it seems to be working. But I'm not going to lie. I mean, Amazon not pushing lower lows does hurt the portfolio. So does Meta. Some of the software stuff is continuing to weigh down the portfolio. Rubrik had amazing earnings. We could actually talk about that, because I saw some people talking about that one in the chat. We could even talk about Adobe too. The once Adobe bull got stopped out in the low 300s, and thankfully I did. But yeah, there's no saving software right now. I think the narrative is actually amplified more because of the fact that you're continuing to see the actual CEOs of these companies, including ServiceNow, Ben McDermott, instead of saying he wants his market cap back and they're capitalizing off it, now he's talking about a higher unemployment rate for college grads by 2030. Wait, it's really? Like, yeah. So he said in the I believe it was this morning, CNBC, and you know that guy Say No to Trading on X? Yeah. He pointed out that quote, and I looked into it and I was like, okay, well, when did he say this quote? What was the full quote, right? So he was just talking about college grads, but that ideally is the new upbringing of the workforce for white collars. And if he's saying those people will be unemployed, and you know that channel TBPN, those two dudes in the suits and everything. First of all, I just started watching these guys, and like, oh my goodness, they have like all these amazing guests on. They had Nikesh Arora on today, and I was listening to it.
Isn't he the
CEO of Palo Alto?
Okay.
They're all brown. But anyways, all the CEOs are brown.
I was like, it sounds like the Adobe guy, right?
Yeah, no, seriously, it could be. I mean, they're all really smart, so why not? But he was even saying, like, look, he's overturning and overwhelming his staff with people that know how to use AI versus people that don't know how to use AI. And if you don't know how to use AI, then you better learn, and you better learn quickly. Like, you now have the people who are defending their own software position in the field now talking about this abundance of staff who does not know how to use AI. So, I mean, preface everyone, like, this isn't like when the internet first came out, where it's like, okay, maybe you could take like 10 years to learn how to use the internet. Like, this is happening at a much more rapid scale. So you better start learning. I do think that there's some validity to that, whether it's overdrawn or not. I mean, for the last decade, software stocks been trading at a premium. Especially with the expansion of SaaS licensing.
What do you think takes the market down to 6,000? If you had to be a real big bear, what would it be?
I would think higher oil prices, continuing heightened unemployment. So the fact that you have inflation now being speculative to be sticky, and now you, instead of having like 2 rate cuts this year, you have like 0 rate cuts and then 1 rate cut in 2027. But that is a result of the higher inflation scare from oil, right? So
But
I don't
you think it's inflation and unemployment? That do you think could it be earnings based? Do you think that could?
Well, usually the market's really good at sniffing this stuff out. So it could be, but we just don't know yet because some of them are having pretty good earnings, even though they're having good guidance too. But I think that's the scary part is that we don't know it's from earnings yet because the earnings yield is still close to double digits.
Right.
But we won't know until it actually happens. And then when it happens, we'll be like, oh, okay, that's why we're down. That's usually how it works in these things. But you could see that there's great earnings across the board, and they just get sold off anyway. And that's the part that becomes a little bit confusing, which we'll probably know later. But the tape is really telling you where the story's at right now. And it's really energy, commodities, commodity related, miners.
But here's a good question. Would you buy energy even if the market is rotating here, or is the trade, it's happened?
Well,
Because if you think the trade hasn't happened, you're assuming oil is going to get back up to 120, 130 for you to make any money on this, right?
Well, if energy just does still stay heightened, which is probably what would happen if we were down to 6,000. Like, I don't think oil is going to drop back down to 70 and then the SP is going to be at 6,000. I think that oil would have to be heightened. I don't think it has to go materially higher. But you got to remember these energy companies were drilling for a long amount of time when oil was way cheaper, and now it's heightened, and all they have to do is continue selling the open market and continue turning those profits. And they have easy comps to go by too. So it's all about the earnings yield. And if these oil companies are printing in terms of earnings yield left and right for at least the next 4 quarters, because oil just started going up 4 quarters ago, they got some really easy comps. And that's the reason why Wall Street's bidding them up. So would it really make sense to have some exposure into oil? Yeah, it might make a little bit of sense. I'm not saying like full port rotate into oil, but there's nothing wrong with like rotating your portfolio into things that are working, right? Like the buy and hold worked for 3 years, but if you really do believe in the buy and hold, then you have to be okay with holding through volatility, because that is part of the game. Like like you were saying earlier, right? Like the last 3 years have been dominating. Right. So if you're down like 20% year to date, like you're still up considerably in the last 3 years, and nothing goes up in a straight line. So
how are you thinking of the essentially the Mag 7 yield? I mean, Microsoft basically in a bear market, Meta getting hit 4% today. I mean, do you think these stocks need a year of just relaxing, or eventually the markets like Meta can't trade at 20 times earnings?
I think a lot of the premium that we've seen on a lot of stocks is starting to come at question because they've all been growing yield so quickly. And free cash flow is obviously going out the door with investments. But if you look at the business from an operating perspective, income and cash flow, like these businesses are doing just fine, but most of it's coming from CapEx, which is outside of that.
Right.
These companies are obviously going to be fine, but the market's going to rotate where the leadership is. And if the leadership is in companies X Mag 7 that are growing yields much faster, then it makes a lot more sense to rotate capital there, especially in the larger oil companies. And then you also have the semiconductor supply chain, which is still impacted by it, but that leadership is narrowing as well. Not all semiconductors are up. A lot of them are down. Like Broadcom is back down to pre-earnings levels.
Dude, and see that's a little scary, because if the CapEx trade goes away, I mean, I think that's the real answer to how we get down to 6,000. If people start losing, but it's not. I mean, Oracle, Nebius $2 billion, like that stuff's not easily dying out, it seems.
I mean, I wouldn't be surprised if Nebius comes out with like a multi-billion-dollar raise and then scares the stock down like 20%. Like that's going to happen at some point, right?
Yeah.
Like no, Nebius is not going to go up forever, right? And I love it. I love the price going up. It's great, but they're going to raise. And people will be like, oh, they're raising? I didn't know that. Let me sell my stock. It's like, come on. It's in a massive range, right? So if you look at the daily range, like the thing goes up, it comes down. It goes up and comes down. But Nebius is still going up, which is great. But it's going to come down. I don't know if it's going to come back down all the way back to the same levels, but like it's going to be in range. And I mean, again, leadership is narrowing over here, right? So if people see certain stocks goes up, like fund managers and stuff, they will rotate into it. And that's really the gate. That's the playbook we've seen for a couple of months now. Leaders will continue to lead.
Do you think Trump can leave the war without a regime change and justify that we did it for the nukes and that, the market accepts that reason and we move forward?
Yeah. Dude, he stood on the podium the other day when we were on and people were just clapping for him. It was just like, what are we clapping for? Like, his guy's still over there and gas price is $100. Like, why are we clapping here? Right? Like, they're going to bend the knee no matter what. And he's not going to take responsibility for it. And he's going to say that he succeeded. And there's no way around that. I think it's a matter of time till he tacos. I just hope it's sooner than later. But these oil prices are at his table. Like, he knows it's happening. And I don't think they're oblivious to it, even though it seems like that they are. But, I think this is just what we're going to have to deal with. It's natural volatility that's led by a narrative. And when he does taco, the market's probably going to come shooting back.
I agree. When we get the official taco, we are going to go up, even if it's temporarily. But
yeah,
I wonder how like legit the taco has to be. It can't just be a tweet. It has to be like hey, it's done,
Yeah, I know. It was a tweet last time. I thought that was the taco. That was not the taco.
Okay, Adobe, Rubrik. Where are these stocks?
Yeah. So, dude, Adobe had good earnings, but like you mentioned before, the CEO left, and he's still the chair, like he's still around. So, but he's pulling a Frank Slootman basically, and yeah, that's not a good look for a company. You're basically saying the company's going to be in transition stage. Like, even though the guy's still there, like, it's still a new CEO. The new CEO is going to bring in leadership, and you have like two scenarios here. You have one, are they going to hire some? Did they already announce who they're going to hire?
There's some interim dude, but I don't think they officially have it.
Okay. Yeah. Best case scenario, you keep some from within. You get some from outside, and that's just not going to be good for the stock as far as sentiment perspective goes. But I think the issue here is that you have people pounding the table on Adobe for like a stock that just continues to go down while the market is still like 3% away from all-time highs. I think that is the biggest issue. And people compare this to Meta, and this is not a Meta moment at all. Because the Meta moment would be when the market is in a bear market and all mega caps are down a lot. And then you have this one company that's doing really good and the market comes back and that raises on a higher tide. Like, that's a Meta moment. But this is like still near all-time highs when the whole sector is down. And Adobe is not going to surprise you with 20% growth, maybe like much higher earnings yield. Like, they're not going to surprise you with that. They're going to keep executing, which is great. The problem is that like when software comes back, I don't know if Adobe is going to go to 400 immediately. I think you're going to get a lot of other software that's going to ride up faster than that. So like, is that the place you really want to be putting your money in? I didn't even know they had a lawsuit, but $150 million lawsuit for a company that's like printing so much free cash flow. I don't think that's really a big deal. I think it would be a bigger deal if that was in the billions.
Why do you think Michael Burry was so excited about it? Did you ever get his thesis or?
I don't know. I don't think the dude cares where his stocks go. He makes 10 billion ARR. Like, why would he care if his stocks are working or not?
I forgot. This dude, that's more money than hedge fund managers make on performance.
Yeah. He found it. He found his niche. This is it. Just writing Substack articles and then just trolling everyone on Twitter. Like, that's it. Any engagement is good engagement to him for his business. And he's already making his money. And like, why would it doesn't matter. He could lose money shorting Palantir with like $100,000 in puts and lose it all, and he'll still make like a net of like $9.9 million. Like, he does not care.
That's a fair point.
Which is unfortunate.
Did you look at Path's earnings at all?
Yeah, they're good, but I think the market is really worried about the disruption with robotics process automation, and I mean, their earnings were okay. They weren't like, holy cow. Like, it's the same as last quarter. They were good earnings, but like, software continued to be sold off. So this is going to get the dominant end of the force. I was actually talking about Jake. I actually want to interview him one time, just like see like, why is this guy like still bullish a stock, even though it's going down? Like, he's done it with Lemonade before. He's done it with, I believe, was it Tesla was the other one that he made a lot of money off of. And like what he's saying about Pat, that's like so different. because those are two innovative companies that are disrupting their sector. But Path's not disrupting anyone. Like they're in a field that other companies are already doing on its own. So why does he think that the market's just going to like realize this one day? But I would like to ask some questions about that. And like, what does this do? Like, how does this guy take so much heat on Twitter? Like I like publicly saying I'm down $8 million and I'm down like
down
70%. Yeah, he hit like 10 plus million in his portfolio. Now it's like 8 million because he went like 300% leverage. So
In what,
margin? And no, Path. So he went on millions of dollars in margin when Path was like around $20, and he's lost a considerable amount of his portfolio. Like he's all in on Path. I mean, Path doubles. He's probably going to be back up to like maybe 8 million or something. So minus the borrowing cost, but your money is all in there. And I don't think that's a Path problem. This is a problem with the whole software sector. But if I had to invest in RPA, I would not invest in RPA. That's probably not the best place to put your money in right now, because that's your vibe coding agentic AI is ultimately disrupting RPA, right? So even though there is agentic AI with Path, like you're cannibalizing your own clientele. Like they do have a lot of clientele. They are shifting more toward enterprise. But I don't think it's like one day people can be like, oh, you know what? Path should actually be a $20 stock. Like I think you need software to come back. And he will hold through that. Doesn't seem like he's going to give. He will hold through that. And I think it'll work out for him at some point. You know, it's a massive beating.
I talked to some people at AIPcon about RPA in particular with the intention of like understanding Path more. And I had a few people tell me that shit's done. Like that's not a public company's independent product. That shit is immediately put in to a suite of features that a Palantir could sell, a ServiceNow could sell. So I hope it works out. I don't know. I don't own Path, but I don't know. Maybe I'm wrong. Maybe they're wrong, but it's one of those things that there is a question about if RPA is legit, right?
Yeah, I mean, it bottoms on one of its worst earnings, right? But is Path bottoming on one of its best earnings? Like, I just feel like that's probably a tell. Like, when a company posts really good earnings and they go down anyway, it's kind of the market's telling you, like, I don't care.
So what about Rubrik? Because it looks like these numbers are pretty good.
Those numbers were amazing. They beat revenue top line by $30 million. They raised guidance, and they're not exactly in a disruptible sector, especially cybersecurity. It's definitely, like John said, like, look, it's not good that Rubrik's going down in really good earnings. Like that's a bad sign. But this is a software problem. And even though RPA is probably an RPA problem too, that is more of a software problem than anything. Anything in software is going down other than Fastly and DigitalOcean, which are technically not software. Fastly is more actually software, but like there's a reason why these companies are going up, because they actually have an attribution toward edge computing. And that's the reason why you see one-stop shop going up, is because they also are contributing to edge computing, but more on the local interface. So like anything that really helps with AI as far as processing power is definitely getting a bid today. But like with things like where it's the application of it outside of these actual LLMs that are doing the agentic AI work, that's where the issue comes in, right? So, you know, it does help that Anthropic and OpenAI are private, because like people can't buy and sell it every day, right? Unless it's tokenization or something. But I think if these major AI companies were actually public, they'd probably be getting some heat in a liquidity situation. Like people would be looking to sell their shares, but they can't. You can't sell your shares in a private market that easily, unless you're in some sort of round or you have like some sort of SPV or something.
So what is your strategy? Are you running calls? Are you rotating? How are you dealing with
I'm actually not doing covered calls. Most because I don't want to sell at these prices. But I have positions in some of the things that are actually doing really good, like AMPX. I'm in. I got in that thing like around $11. I got in Fastly around 19. Nebius, obviously, and a few other things in the semiconductors that seem pretty resilient to all of this. Not too much hedging. You know, it would have been nice to hedge at the top end of the range for GQs, but definitely did not timed that correctly, I still made some money off it. But it's like, I would say that if it weren't for like the Amazons and the Zetas and all these other companies that like went down from their all-time highs or recent highs, like I would probably still be green year to date, but I'm not green year to date because look, I have a lot of Amazon and I have some software companies and things that are getting hit in the portfolio. Yeah. I can't, for me, it's like, I can't do the covered call strategy because I would not want to sell these shares at this price. And I don't want to like roll it into, roll up and out sort of thing. Like, I don't like to do that. I'd have to look at it a lot and everything. And for me, it's like, I'd have to be willing to sell it at a certain price if I'm going to do that. Yeah. But I don't know. I mean, I have a decent amount of cash right now. So I think that helps. And also stopping myself out of certain positions that I get into around break even and stuff then is probably helping reduce the drawdown. Like I did own Path at $14 and then I sold it around 15. Like I held it all the way to 20 and I brought it, it came down and I sold it before break even. So like I did not lose money in that one. And the same with Adobe too. Actually, I think Adobe, I lost like 5-7% on it, but you know, it is what it is. But like that, I'm for new positions that I'm opening, I'm setting stops on it because I don't want to continue adding to these positions or holding on to it while it's waiting on the portfolio. I'd rather look for something that's working. So there's a few other companies that I do want to buy into if they do pull back to like their 9 EMA on the weekly, or maybe their 21 EMA, preferably on the weekly. Companies that are basing out. And they mostly are in photonics and semiconductors, but also crypto. Crypto has been surprisingly resilient lately. Yeah. And I've been waiting for an entry in Circle. I was actually wondering, like, why is Robinhood down so much if crypto's up? You know, I thought it was.
No, I agree. I think their volumes across the board on other parts of the business took a hit in February.
Yeah, I did see those numbers. It's been trending down and reversing. So sentiment's more going to hit that one than anything. But Circle's not having that issue, but I guess it's because they have a stable coin. They have a stable coin theme that they're going to be riding off of. But it certainly does help seeing crypto come back. So I think that's the reason why a lot of these Bitcoin miner neoclouds are able to stay afloat because crypto is holding afloat, right? And then and all these other companies, probably the same thing too. But I am in Marvell. My average is like $90. But I'm sticking to shares. I'm not messing around with options right now in this environment. It's the same playbook that I did last year. Because you just never know. Like you never know if we're going to drift sideways or go lower. So it's difficult. It takes some management to navigate your way through this. Dude, I don't know how some of these people are up like 30% year to date unless they're holding like Kraken Robotics, ASTS, or Rocket Lab. Like the fact that Stock Talk's still 40% year to date is just wild. Like I don't know how they do it, and it's I think yeah.
You've had to be in names that are not necessarily thematic, but names that last year were really low, and this year they didn't get hit as hard, right?
Yeah.
So if you got into Amcor at 25 and it got up to 50, but now it's only at 44, you're still up a lot. Like your percentage shouldn't get hit as much, even if you're not up as much. But there's a lot of people, you know, that are in a Rocket Lab that were at 80 and 90 and now it's at 68, right? Or a Hood, or you know, so many of these are SoFi. Like those typical poster names, HIMS, obviously, they've gotten just destroyed. But those are also the names that brought people a lot of wealth, you know? So I don't know.
Yeah. HIMS is a brutal story. And I think Novo needs them more than HIMS needs Novo. That's the scary part about all of that.
Yeah.
So, you know, I feel bad because I would think that Novo was doing just fine. And then all of a sudden it's like they're in trouble. They need HIMS. And I think that is what is causing HIMS to like stop over here. One, because the shorts are pressing their shorts. But also two is like, what if Novo pulls out? You know, like, sure, you don't have like litigations or disputes, but if Novo pulls out, then there goes that thesis, right? And then HIMS is probably not going to go back to the teens, but maybe they won't go back to $70.
The U.S. will be getting $10 billion for brokering the TikTok deal, as per the Wall Street Journal. Investors in social media's platform are providing the U.S. $10 billion for so basically, Trump's getting $10 billion for getting Oracle and Silver Lake to get the U.S. part of TikTok. Okay, so that should pay for 2 days of the war.
Not bad. We can go another 10. We can go another 2 weeks.
Oh
and we'll
my
be good.
God. This is crazy, bro. Can you believe we're dealing with oil out of all things at 100 when this was the anti-oil guy?
Dude,
Anti-oil
it's
high prices guy.
the Chappelle Show skit is still applicable to today. Like Dave Chappelle is a genius because everything he's done is still applicable today. And it's just like, it's funny because this is the same playbook and it's been like criticized over and over and over again, except this time there wasn't a catastrophic domestic terrorist event that caused all of it. It was like some dude decided, made a bad move, and now it's biting him hard. I honestly, I was seeing diesel. Because you know, I live in LA. I was seeing diesel for like above $6. I'm like, whoa, would suck to be a truck driver right now. But then I look over, yeah, I have a Tesla. So,
oh, you have a Tesla? Which one?
Yeah, I have the X.
Okay.
So I upgraded to the X earlier this year when I got rid of the Y. But I've been driving. Well, I do have a gas car. We use very little, but other than that, like I've switched to EV and I am not going to switch out. Like it would just be a bad idea now because one, the gas prices, but two, it's like the maintenance is just nothing. Like I don't miss I don't miss ICE cars at all. Or gas cars. I didn't mean ICE.
Do you have FSD?
No, I don't use it. I don't have it. I don't want to.
You never thought like you'd want to experience it? You just like the EV for...
I just like it. I just like it. Yeah, I mean, in LA, FSD is not the best thing in the world because there's a lot of stop and go. And well, also, my X is hardware 3. So it's not fully capable of having like the best FSD system. So I do have that as well. But I mean, still, I didn't get my Tesla for the FSD. I got it for the fact of having the best EV in the entire world. And if it wasn't going to be a Y, the next best EV is going to be the X. And I ain't getting the Cybertruck. You use it, right? Because I know a lot of people that use it and they like swear by it.
Dude, I used it for 4 hours yesterday. It was phenomenal.
It's awesome.
Like, it makes you think Tesla should be the most valuable AI company in the world, but you know, they're just having some broader growth issues. Do you think Tesla's going to be able to hold on to the 390s or the 400 range, or I think that one can get hit bad?
That's a mega cap, so I think that's going to get hit. They do have the energy portion of their business that might be coming back, and but I do think the competition they're starting to get from BYD, as well as NIO, might become a little bit of an issue because I think I read a headline that BYD is looking to acquire some EV companies or something in Canada. So now they're encroaching in North America, and it's like, that's probably not good. But since when was the last time someone bought Tesla for the numbers on their earnings?
Yeah.
Like, you know, this is much greater than the numbers in the earnings. It's just a matter of catching it and just holding on to it. I don't know. You know, honestly, the market goes down, Tesla's gonna go down too. That is his mega cap. There's nothing you can do about that. Actually, I don't think there's anything anyone can do about that. Plus, when you have like these moves where it like looks like it's gonna break out and it fakes out and goes down, like those are probably the worst possible moves you could see. Because then now you have all these stops getting hit to just sell it more.
This is just, dude. I mean, I wasn't live yesterday, but I'm seeing these headlines back and forth, and I'm like, it is just,
Yeah, no, I know. How was the Honda CEO? That looked really cool.
Yeah, he was cool. Are you in that stock? Do you like that company?
No, I'm not in the stock, but I do have exposure to drones through AMPX. So they seem pretty resilient.
I interviewed him. He's pretty cool. I am a bit confused about their strategy of acquiring companies and like having this like portfolio. Look, I know people love it because the stock went from 50 cents to $10. So you got a lot of people that are like, no, we cannot let this one, you know, just be a meme stock and go back down. So I understand why people are motivated to hold it. But I also think there is something legit there. I need to do my due diligence though. CEO is cool. He's legit. Didn't give me any weird vibe, but it was awesome. But
was he like a Peter Beck or Alex Cart sort of person? Like, you know, that kind of like that kind of personality where it's like he's just
not at all. He was more like a suit, but he was a nice guy. He wasn't like boring or anything. He wasn't like Carp, where like you're mesmerized and you have to listen to.
Yeah, yeah. I thought that's what really makes those companies stand out. Is like you have the CEO who's just their personality is just out there. Like they're just a different breed. I feel like that's what really makes companies like stand out. You're not saying that Ondas can't be that, but it is understandable though that Ondas is doing so well and that they have to do these acquisitions in order to accelerate the growth. I mean, Kraken Robotics is doing the same thing. They just acquired that company, and that's going to add like I think 300.
Do you like them? You think Kraken's legit?
Yeah, I think Kraken's pretty legit. I mean, they're starting to acquire some government exposure, right? That's pretty important, and also they're part of the existing theme with the war. The question is, if the war is over or if the war ends, what happens to these stocks?
That's a big question.
Yeah,
I don't want to buy these stocks because of the war.
Yeah.
Yeah.
I mean, you could like set a stop or something, but you know, at the end of the day, these are growth stocks. And we did see that Kraken kind of gave up some of its gains, even though there was more marine activity out there. Actually, when I saw the headline, I thought they were talking about like marine, like as an underwater sea marine, and now they're just talking about the U.S. Marine Corps. And I was like, oh, where's Kraken at? Oh, it's down there. Oh, okay. But Kraken seems like a legit company. Actually, in your meetup in New York, there was a dude there. I keep forgetting his name, so I apologize if I forget your name. He had a beard, and he was like so bullish on Kraken. And he's been in since like the $3 range. And he said he thought it was late. And in my opinion, if you're going to buy and hold, Kraken looks like it might be something too. The only problem is that you are buying a lot of expectation at this point.
Yeah.
Right. So it does trade pretty expensive now. So, you know, but long period, you know, the Anduril partner, government contracts, underwater sea drone activity. But that I guess that's the reason why Huntington Angles is doing so well as well for shipbuilding. So like these like non-growthy type of tech sectors, there is exposure in these areas that you can get a part of. But if you do something research or like ChatGPT, that stuff, like it doesn't have to be these companies. Like there are other companies involved in this. And I saw AMPX on Twitter, and that's kind of gave me the idea of it. And then when I looked into it, I was like, oh, this is actually good exposure. But the whole sector and like the drone stuff is actually moving up and being resilient. So like you just have to get one that's like a piece of that pie. I mean,
I want to get your reaction to this because this just came out as well.
The CME group today, Terry Duffy, you probably know each other. He was speaking at a conference in Florida and said the Trump administration would risk a biblical disaster, his words, if it attempts to lower oil prices by intervening in derivative markets, right? The oil paper market. We're talking futures and options. Is that something under consideration?
Well, I'd say there's certainly been a discussion. We got a lot of smart people working in this administration. There's a lot of smart people that work in the energy trading market. Energy trading is one of the biggest markets in the world. An intervention there to try to, manipulate and lower prices would require enormous amounts of capital. That's all I'll say on that front. But I'd say that right now, the best way to get prices down is increase supply to match demand. And President Trump, again, under President Biden, we were lowering the amount of energy we were producing. We were regulating it out of business, strangling entire industries that were producing either electricity or liquid fuels out of business. And now it's gone the complete opposite direction.
Do you think the derivatives market from the United States government would be a role to get oil prices to go down, or do you think that's just too much intervention?
I saw the headline earlier. I didn't see the quote. I didn't see the clip. But I was thinking about it earlier. Like, what if they are shorting oil futures and oil continues to move up? That could propel prices higher if they have to cover, right? So that's a very dangerous game. The oil volatility index, or OVX, is like the VIX for crude oil. And this thing is up again. It's at 119. OVX, the ticker. So again, this is the VIX of oil, and you want this thing to compress in order to get more people buying oil. I'm sorry, in order to get the price to suppress a bit more, right? So if this suppresses, then you could get volatility of oil come down, which is the volatility index, and you could get the price of oil to go down. But there is a lot of put buying. There's a lot of shorting of oil, which is amplifying the move in oil right now.
Do you
have to cover that collateral?
Do you agree at all with this Trump argument that higher oil prices are good for the U.S.?
No. How is that good? I think the Bissent clip, I saw a Bissent clip yesterday where he's basically like, oh, actually, no, not the Bissent clip, the clip you had from Vance earlier. And he wants to have our own independence when it comes to energy, which makes sense. But if they really want that, they're basically saying that high oil prices have to stay for now in order to eventually gain that independence to bring it down and stabilize it. Because right now we're at the mercy of no longer Venezuela, but we're really at the mercy of a lot of these exporters of oil, including Iran, as long as we stay dependent on them. Right. And if it's all about making America great again and onshore and U.S. exceptionalism and everything, like, they don't want to depend on that. And we might just, according to him, we might have to deal with higher oil prices.
It's not going to be fun.
Dude,
Maybe the markets can normalize. But last time oil was, we had a 2022 last time this happened for the market. I know rates were going up, but still, if rates aren't going down, you know, yeah, it can definitely be a bit hard to navigate.
That is a derivative of the oil trade. I think this is all really associated with oil. The dollar's going up as people bid on oil in US dollars. Also, yields going up because they have to sell treasuries to convert them US dollars to buy oil contracts and so on. Like, this is all like the same trade, right? It's all has to do with oil. Same with the stock market, risk off, money's flowing out of mega caps to be able to buy more oil and so on. Like, this is all the same trade. And then you also have fund managers that are trying to short oil calling the top. So in order to not go like 100% net short, they need the collateral by selling some of their stock to do that, right? So it is all the same trade. This is all a result of oil. And I don't know how in any way this is good for the economy with high oil prices. It's not. Like, you need oil to come down, dude. I actually do think that Monday might not be so bad, only because the Qs are right on the 200-day moving average from a technical perspective. But also, we were considerably lower overnight last Sunday.
Yes, we were. Well, we were at 659 on Sunday. We're at 661 right now, so it's not that bad, right? Well,
we literally bounced off the 200-day moving average overnight on SPY last Sunday, and we're only like less than 1% away from there.
Yeah.
So
89 to 593. Yeah.
You know, it could be a bounce, and a bounce would just put us back in the range, right? We're still in the range. So,
bro, what if it's not a bounce though? What if it's just
GTC, dude? Like, I feel like GTC is probably a very bullish tech event.
That's fair.
And that's why semiconductors are pretty resilient today. So, like, I'm not trying to be short heading to this weekend. That's why I closed my hedges today, because it was like, if it goes down, then fine, right? I'll get back in the hedges. But like, this is a really critical spot. Also, what's a weekly looking at?
I do want to roll my calls up for NVIDIA next week because what I would like to do is I would like Jensen to say something really good. NVIDIA should pump to 190. Then I'll sell call. It's not going to 200 next week, bro. And if it does, I'll be happy. I would have no problem rolling out a couple of weeks. And I don't know if Jensen can get it there. I really don't.
It's gonna be like Jensen's like, wait, hold on a second. Got call Ahmed. Yeah, buy him back, man. You know that Trump meme where it's like Trump like that. It's like, Jensen's like hitting on whatever it is. Yeah, you better cover those covered calls right now, because I'm about to pump this baby up right now.
No, but he's going to say as many good things as possible. The market's going to love it. And then in a couple of days, wait a second, oil's at 107. Okay, why the hell are we buying NVIDIA? And then that's it.
I'm not going to lie. Like, I don't want to be short coming to this event. This is the most bullish. This is the most bullish tech event in the entire world, other than CES. I would actually say this is more bullish because this is really like all about NVIDIA.
And he's going to praise all the software companies. He's going to probably mention the photonics names. Like,
oh my goodness.
He is going to try to help every company. That's what he does on these events to get them out of this rut they're in. But I think this macro is a little too hard for even Jensen to navigate.
Are you going to it?
Yeah, I'll be there.
Oh, nice. Yeah, Stock Talk's going to it too, right?
Yeah, Evan will be there. We'll be a bunch of us.
So that's March 16, he's having the keynote. So 14:50. Yeah, that's Monday. That's Monday at 11 a.m. Pacific, so 2 p.m. Eastern. So you hear that, everyone? Don't go into this event with covered calls. I would not want to go into this event with covered calls or major put size, right? And also the VIX is at 27 today. So it's pretty high.
Dude, yeah. What happens when this VIX, like, it feels like it should break down from here, right?
Yeah.
Historically.
I would actually say, like, the VIX was at 35 on Monday.
Yeah.
So we are lower. We are lower. So, like, that's also another reason why I don't want to hold puts into the weekend, right? So, like, even if we're flat over the weekend, the theta is going to kill you, plus the volatility compression is going to kill you too. You'd need a massive move lower. The only way I feel like to do this is to short individual stocks or short the market through actual shorting, not puts. Or to sell covered calls, I guess, is the only way to play this, because it is just, we've just been in a massive range, man. Like we could bounce on the Qs back up to 610 and like nothing would have changed, and then sell down again, right? That's all we've been doing. Up, down, up, down, up, down. Like, this is getting nauseating, man.
This is another clip that has got attention today.
And I had to take an excursion. We had the greatest economy in history. We still do. Oh, this will bounce right back. When it's over, and I don't think it's going to be long, when it's over, this is going to bounce right back so fast.
When are you going to know when it's over?
When I feel it.
Okay.
I feel it in my bones.
Will you ask anybody in particular? Would that be some of these a joint decision?
Well, I deal with people. I have great people. You know? I have General Raisin Kane. I have Pete. Pete's turned out to be a star. Marco's great. JD. I've got all good people. We've got a great group.
So let's talk about.
Did you see that clip of Pete Hegseth basically saying, like, the strait's open? It's just Iran is just going to shoot you down, but the strait's still open. Like,
there's a clip where he does that.
Yeah, just go to not Jerome Powell, and he like shared it recently. Or if you just search Pete Hegseth, straight is open or something, you'll find a clip on it. It's just like, what? Who says something like that? It's still open. Just gonna get shot down.
I got it. Oh my goodness, dude.
The only thing prohibiting transit in the Straits right now is Iran shooting at shipping. It is open for transit should Iran not do that.
Genius. The Strait is open, actually. It's not closed. It's wide open.
My portfolio would be up this year. Like, it really would. It's just, if the market hadn't gone down, it would be up.
Like, why are you guys playing this down? Like, this is a really crappy situation, you know, but it literally takes, as crazy it sounds, like, it just takes one tweet. Like, he doesn't even need to pull out of the war. He just needs to tweet that he's going to do it, and the market will come roaring back. Like, crazy situation.
Here's another one that just posted. Trump is taking questions right now.
Well, to me, it means very simply that we are in a position of dominance that nobody's ever seen before.
Audio is hard on this one, but basically saying unconditional surrender is a position of pure dominance for the U.S. That's the quote. And then the other quote we just heard was, the war will end when I feel it in my bones that it's time to end it. I mean, that part's also confusing because, again, and this is not political, but it makes you wonder objectively, what is the strategy here? Like, feeling it in your bones is not a strategy, right? Or do we just trust Trump's bone health as enough to tell us when it's time to end the war?
I don't know. Look at the tone of that guy's skin color. He's just kind of scary. Like, what bones are we talking about, dude? Like, I don't know. The guy, he does not look, I don't know if he looks healthy, but the dude can stand in front of millions of people and talk for 2 hours. Like, he can, his bones are strong, apparently. He can do whatever he does. You know, when he feels it in his bones, is like when he gets off the phone with all those people and just like, all right, guys, cover your shorts. Let's bring the sucker back up. That's when those bones are being felt.
He just has to tweet it for us so we know.
Yeah, he will. He will. Now's a good time to buy stocks.
Trump was asked, when will the Navy start escorting tankers through the Strait of Hormuz? Trump says it will happen soon. And then he says war will continue as long as necessary. which again, it's not really different from what he's saying, but it's conflicting with it's going to end soon when you're saying it'll continue as long as necessary, which is like under the same pretense of what he's talking about. But again, the exact wording of it makes the algos definitely think that we're not ending anytime soon.
Very mixed signals.
Bitcoin falling a little bit as well. Oh boy. All right, Sam. Thanks for joining. I'll put Sam's Twitter right here. People can check him out. He streams live every day at 2:45 p.m. Eastern. So please make sure to check him out. There's his Twitter, and he will be at the LA meetup as well.
Yeah.
So
I'm not be doing the market close, man. The show must go on. Must go on.
Show must go on. There you go. All right, Sam. Appreciate you, man.
All right, sir. Thank you.
Later. All right, folks. I think that's it. I think we're done for today. Longer stream to make up for no stream in the morning. Talked about all these different headlines. We got some new Trump quotes coming in right now, but the audio is not the best on them, so we'll try to take a look at them on Sunday. We still will have a future show on Sunday, I believe. It'll be 4:45 my time, East Coast. West Coast, but we should still be good for that. So next week, the market close is not going to happen pretty much all week, but the market open will. Market close will not happen all of next week. So Sam, hopefully he'll be able to do the market close for people and keep it going, but we will have the market open. We don't have any earnings next week outside of, do we have any? I think we're done with all of them. Yeah, we have Oklo and Lululemon and Micron. I guess those are our main ones. Outside of that, nothing. But we'll be back the week after. I guess Micron is the biggest one. And yeah, I will see what we can get from GTC. I do agree with Sam. I think Jensen's definitely going to pump stuff up, and it'll be good. Unfortunately, this oil situation is going to affect the entire market for as long as oil continues to be up. And Trump knows that, which is why he keeps trying to say it'll be okay. But it's just really hard to think there will be a trend in place until this changes. That's pretty much it. That is pretty much it. Do you like Rivian? Not really. I've never sat in a Rivian car, though. I need to actually try one of their cars, but again, I would rather buy Tesla stock over Rivian if I'm really trying to go long EVs. Although Rivian did have a nice bounce towards the end of last year. Word of the week is ghosted. Dude, I hate not doing the show either. It sucks, but I think the Carp interview was great. I think you'll enjoy it. And the thing about AIPcon is just like this was my fifth one. I started going to the fourth one. I went to AIPcon 4, and this was the ninth one. So it's really cool because I've never had like a corporate job, and I've never been to like corporate job events. Like if you're an employee at a company, you go to like these corporate events. But being able to attend AIPcon has kind of been like the way for me to experience that. And it's just really cool. It's a very enjoyable experience. There's a bunch of people that I love meeting. Oh, I didn't even tell you guys. So I was going to tell you this. So I got invited 2 days ago to in their words, VIP dinner with the CFO of Palantir, Dave Glazer, who was awesome. He's an awesome guy. You guys have probably seen him on the earnings calls and all that stuff. And I just see this on my email. It's like VIP dinner invite. I'm like, okay. So I show up, okay? And I walk into this dinner. It's at this like fancy restaurant. It's like this private room. And there's a bunch of other CFOs from Palantir customer clients. And then there's a bunch of sell-side analysts. And I finally, like the UBS guy, Deutsche Bank, all these sell-side analysts, the people that actually produce the research on like the price target on a stock or whatever. And I finally got to talk to these guys. I finally got to like see what these people look like and how they are when they put like Palantir to 180 or Palantir 130 or Palantir 200 as our price target. And I'm telling you guys, objectively, these people are no different at all than you and me. I am so serious. I talked to a couple of these guys at the dinner, and like I was like asking them, like, how do you value Palantir? How do you think of it? How do you get? And it's like I was talking to just another person in the broader retail investing community. I mean, there was zero analysis, and it's not to say they're not smart or anything, but I'm just saying that it's not like there was this above and beyond analysis that was so special and important coming from them as a representative of this big financial institution that just put a price target. They are just another person. Their brand associated with the Bank of America, UBS or something is what accelerates and accentuates the messaging around a price target for a stock, which is why it has so much influence, whether it's a good price target or a bad price target. But the actual person, they're like, I mean, they're just normal people. They're just like I'm seriously, I'm like talking to these people and I'm like, they're not that special in terms of their analysis. Not to say their analysis is bad, but it's not like I'm blown away by how they're talking about numbers and all that. I'm like, no, they're just regular dudes that do a little bit of research. That's it. So I really did appreciate being able to talk to some of these sell side guys, because you always think like they're so special and that's why they're putting out this price target, but they're not. They're just humans. And their bank is what's special and what creates the, like if JP Morgan upgrades you, like the market pays attention to that. But the analyst at JP Morgan setting the price target is not like some, unbelievable person that has done so much analysis. Like, no, they're doing this. They're saying the same shit. Like I asked them, what do you think about the valuation? They're like, yeah, man, valuation's tough, but we think that their free cash flow could keep growing. I'm like, okay, that's what everyone says. Like that's, they don't have some specific way to think about companies in a different way other than you and me that are also analyzing companies by ourselves. And so I thought that was really cool just to be able to talk to them and like get a little bit of a glimpse of it. And one of the guys that he now works at a different bank, but he used to be under Rishi. And all of us who are in the Palantir world, we know Rishi. Rishi is the guy who still has a $40 price target on Palantir. At one point, it was like $9 for the longest. And it was so funny because Dave found out, Dave, the CFO, he was like, oh, he used to work for Rishi. It was like, why does he hate us? And it was just so hilarious because the guy was like, I don't know, man. I tried talking to him, but I don't know what to tell you. And so I thought that was also super funny. But yeah, it was fun. It was a good time. The dinner was great. And it was really cool because, they didn't have to have me there, but they wanted the retail community to be there. They wanted the customer clients executives to be there. They wanted the sell side, fancy banks, institutions to be there. So I was really just happy to have a seat at the table, and it was cool to get to talk to all the different people. And then the event itself was pretty good. Oh boy, we got a Trump tweet. Okay, 3 minutes ago, here we go. Moments ago, at my direction, the United States Central Command executed one of the most powerful bombing raids in the history of the Middle East and totally obliterated every military target in Iran's crown jewel, Karg Island. Karg Island. Kharg. I've never heard of this. It's one of their crown jewel islands. Our weapons are the most powerful and sophisticated that the world has ever known, but for reasons of decency, I have chosen not to wipe out the oil infrastructure on the island. Translate reason of decency to I don't want oil prices to spike. However, should Iran or anyone else do anything to interfere with the free and safe passage of ships through the Strait of Hormuz, I will immediately reconsider this decision. During my first term in country, I rebuilt our military into the most lethal, powerful, and effective force by far anywhere in the world. Iran has no ability to defend anything that we want to attack. There is nothing they can do about it. Iran will never have a nuclear weapon, nor will they have the ability to threaten the United States of America, the Middle East, or for that matter, the world. Iran's military and all others involved with this terrorist regime would be wise to lay down their arms and save what's left of their country, which isn't much. Thank you for your attention to the matter. This is not a sign of strength. I'm sorry. This doesn't feel like it's a sign of strength. He's basically saying, Iran, please make sure you stop messing with us, or else we're going to take out the one thing that you guys really need, which is this Karg Island. The island has been untouched, however, during 2 weeks of the U.S. and Israeli-led war. Analysts say any attempt to attack or seize Iran's strategic oil hub is likely to be fraught with risk. If he actually gets rid of this island and gets rid of their oil infrastructure, I don't think that's going to be good for oil prices. Now, maybe he's not bluffing. Maybe he's legit going to do it. He's saying, I will immediately reconsider my decision if Iran does anything to interfere with the free and safe passage of ships through the Strait of Hormuz. Okay, what if Iran actually shoots up a ship that's trying to go through the Strait of Hormuz? What if they force Trump's hand? And then what if Trump gets rid of this Karg Island, which will be devastating for Iran? Let's see if we can get a video on this island. I've never heard of it before, but apparently it's very important. But I don't think it would be great for global oil prices either, right? Like, I would imagine it'd be bad for everybody. Let's pull this up right here.
It is the centerpiece of Iran's oil industry. Located some 25 kilometers or 15 miles off the shore of mainland Iran, Karg Island is a small but vital strip of land for the Iranian regime. Around 90% of its crude oil exports pass through here. Arriving by pipeline, the oil is then loaded onto tankers docked on the island, which, thanks to its deeper waters, serves as an accessible port. The loaded ships then return south through the Strait of Hormuz, which is less than 500 kilometers away. Karg Island is Tehran's gateway to the world economy. Currently, some 7 million barrels of black gold or crude oil pass through here every day. Much of it is then freighted to Asia, namely to China and India. And such transactions are a vital financial revenue for the regime, including for its Revolutionary Guard and the army, which control much of this cornerstone of the overall Iranian economy. Yet, as in previous conflicts, the U.S. and Israel have largely left the 25 square kilometer island untouched in its strikes on the regime. But there are calls to hit the island. Former Israeli Prime Minister Yair Lapid said Israel must destroy all the oil fields and energy industry on it, adding that this would crush Iran's economy and bring down the regime. But in Washington, the U.S.'s energy secretary said it would not be targeting Iran's energy industry. Yet, according to Axios, such a maneuver has been discussed, with the possibility of American soldiers taking the island.
Okay, so yeah, either this is going to escalate or de-escalate very quickly. Either Iran is going to be legit afraid that that Trump is serious about attacking this Karg Island, or Iran's going to call his bluff, and then we're going to see if Trump is bluffing or not. I mean, this is a little scary of a game, folks. It works if Iran puts down their arms and stops fighting, as Trump is implying in this tweet, in order to essentially make the argument that, you know, they want to protect their oil infrastructure. But if they don't, then they're going to force Trump to either do this or not. And again, if he does this, I don't know that much about this island. I'm just learning about it right now, but I would imagine if it's responsible for 90% of their crude oil exports, how is that going to be good for global oil supply? Unless we're just completely deciding that Iran is never going to export oil again, and we are just going to not take over the oil, but just destroy all the oil in terms of attacking the energy infrastructure. Right? Like that. So this is what it seems like this tweet is implying right here. Either the Iranians back down and Trump continues to not attack the energy infrastructure and find a way to essentially make a deal, I guess is what he's implying here. Or, quote, I will immediately reconsider this decision if Iran or anyone else does anything to interfere with the free and safe passage of ships through the Strait of Hormuz, which would be wiping out their oil infrastructure. How's that good for the Iranian people? That is also a decent question. I imagine it wouldn't be the best for the people of Iran, even if you did have a regime change, if they I mean, if 90% of their oil exports are now wiped out, I mean, the people in a new regime probably still need money to and oil is where they get the money from. Some other stats: Karg Island is Iran's main oil export terminal, handling about 90% of the country's crude exports. It has major storage tanks, pipelines, and tanker loading facilities connected to Iran's biggest oil fields. Because oil revenue funds so much of Iran's government and economy, the island is economically critical. It is also a major strategic and military target, since disrupting it could severely damage Iran's economy and affect global oil prices. Well, this is why people sell stocks on Friday. Because if we were to hit that island over the weekend, obviously that wouldn't be the best. I don't know, guys. I guess we'll now find out. I kind of want to believe Trump's not going to actually do that, because he knows at the end of the day it's not going to be good for oil prices. Right? It's like that meme where the girl's like, right? Like, there's no way he actually does that. If he does, I mean, the economy's already been decimated with sanctions. This would absolutely ruin it. I mean, one could imagine, poverty increases, all that stuff. But then if there's no regime change and they get rid of the oil infrastructure, like if you do this, you have to imagine there's a plan then to actually initiate a regime change or put boots on the ground after you do this to officially initiate the regime change, which I don't think Trump wants to do. He will take control of the island. If they do, they got to put boots on the ground. You can't just bomb it. If they're going to actually take control of it. Also, why would they bomb it and then take control of it? Because there's talking about hundreds of billions of dollars that are probably flowing through that island. It just wouldn't, just wouldn't make sense to bomb it. This is crazy, bro. Absolutely freaking crazy. How many would die taking that island? Yeah, I mean, the Iranians will put up a fight too if we actually try to go for it. All right, folks. I'm sorry we got to end it on this note, but I mean, there's nothing we can do at this point. We're going to have to really see how this plays out. I do agree with Sam that next week GTC is a very strong market moving event for tech, but at the end of the day, the macro headlines, they're just not pretty. And unfortunately, there's just not much we can do other than hold tight, run some calls, or maybe, have a little bit of cash on the sidelines. But again, I think it's too easy to go net short. I don't think that's the play. But definitely feels like the chop continues if we're stuck in this range. Yeah, VG could definitely make... I mean, look, VG has been a good hedge for a lot of people. But again, if natural gas prices start going back down and this war does come to an end soon, VG, we saw it the other day go from 15 to 10. I mean, how many people bought it at 14.50, 13.80 just because they thought they were getting a good deal? Now it's back to 13.10, but you got to really have some sense of longevity on this war in order to be hedged up with this, because there's obviously way better prices you could get if the things come to an end soon. If they don't, though, then those prices could continue going higher. All right, that is it for me. I'll be back for the futures on Sunday. Yeah, we will just keep going through there, folks. There's not much we can do. We got to hold on, see how this plays out. But this is what we're dealing with. And hopefully things change. Wow. Really going after the Karg Island. And that is Trump basically saying on a Friday night, I'm not messing around anymore. I want to go for the good stuff, which is the oil infrastructure. But I think he might be trying to imply to the Iranians that, no, seriously, I'll do it. Even though we know he's not really going to do it, right? He's trying to act like he will. And then if he does, then all right, oil's going higher. The question is, how much are the Iranians going to try to call the bluff if it is a bluff? All right. I'll be back on Sunday. Everyone have a good weekend. If I don't catch you on Sunday, then we'll see you on the Monday market open. We will still have a market open all throughout next week. It'll be on the West Coast. So I'll be getting up at 5:45 every morning, and we'll be doing the show. And yeah, we will keep going from there. Again, LA meetup, that's happening March 28th. Chicago meetup, if you want to sign up, that link is pinned in the chat. Hopefully everyone has a good weekend. And yeah, we'll keep covering everything that's going on, as there will be a lot to cover as we get into next week. Probably the AIPcon interviews will be out this weekend. And if not this weekend, then most likely Monday. But they should be out soon. Yes, I need to escortation. I can't believe it. It's better than the word freaking Seema said on CNBC. My word was at least a little bit better. And hopefully we'll get her on the show. She was actually really interested in coming on to the show. She had no idea who I was, but after I told her about it, she was super interested. So hopefully we'll get her on. All right. Thank you, everybody. We'll see you guys on the futures for Sunday. Bye, everyone.